Hello, everybody. Welcome back to another episode of Sunday Futures. We are back. It has been way too long. It is Sunday, July 6th. Thank you, everybody, for being here. We had Friday markets closed. We had Thursday early market closing at about 1 p.m. And we're back. We are back, and it is time to get started with opening up these markets. We're going to have futures open up in futures are already open right now. They are red. We're going to have the overnight markets open in 20 minutes. And there's a lot of stocks that I am particularly curious about seeing how the market is going to interpret the events that have happened over the weekend. And we're going to be talking about the events that have happened over the weekend. As you can see right here, futures are red by about 1/3% across the board. Small caps down a little bit more than that. So we're going to see if that holds up or if that continues going into the market open. Outside of that, we've got a variety of things that have happened with tariffs. The T word is back in discussion. Besant and Trump had some, I would say, rather important things to say over the weekend, so we'll talk about that. Mr. Elon Musk has formed a new political party called the America Party, literally formed and filed with the Federal Election Committee that he is opening up a new party called the American Party. Trump had some things to say about that, so we will talk about that as well. And then on top of that, we're going to see how the broader indices perform. Again, S&P 500 has been relatively green. We closed at an all-time high on Friday or on Thursday. Everything was pretty much green. July tends to be a very green month. For the past 10 years, July has been up 1.25%. We're going to see if that continues, if the bullish trend is there. I've got some charts and some macro data to show everybody. Some that are bullish trends, some that are bearish trends. But we'll analyze all that, and we will go deeper from there. Yes, I'm seeing the comments. Yes, I've got some flowers on. It's summer. It's July. Needed to break out some of the flowers, all right? We need to keep things bright. So I haven't worn this short in how many times? I think last time I wore this shirt was literally around this time last year. Probably in some market open or some video I did a long time ago. I found it in my closet. I was like, you know what? I'm gonna bust out the flowers today. So that's what we got. Thank everybody for being here. We got a lot to talk about. First of all, I just want to say thank you all for the love on the Tom Lee interview. I mean, this thing is just, I had a feeling people would care about listening to a conversation between us. I didn't know these many people would care by this much. This video, as at the time of me pulling it up, has 127,000 views. I have never gotten 127,000 views on a video in 2 days. Average click-through rate 6.8%, which is really good for YouTubers. Getting 3 to 5% click-through rate. So for every 100 people, if 3 of them or 5 of them click, that's a big deal. This thing was like 9 or 8% for the majority of the weekend, and it's supposed to come down because YouTube's supposed to give you more impressions, and you should be getting less clicks if you're getting more impressions. But relative to the impressions, you should be getting a decent number of clicks. And I mean, let's just say people care about Tom Lee. People care about Tom Lee. So yeah, it's been on YouTube for 4 years now. Have never had a video get this much reach in this amount of time. So incredible stuff. I got a lot of feedback on the interview, stuff that I will take to heart on future interviews. Some stuff that was constructive criticism, which I agree definitely needs to be worked on in the future. But the majority of people, I think, really enjoyed it. And I've listened to it like 5 times over the weekend, and I think that like if I had to give myself any credit, I would say the conversation really flowed. And I think that the thing about podcasts that make them like listenable, regardless of who the guest is, right? Because like a podcaster develops an audience if they can have a conversation with anybody. Obviously, the guest is very important, but if you can have that conversation and make anyone feel comfortable and relaxed, you can succeed as a podcaster. And I think that was the biggest thing. I think people, like, the conversation flowed. It didn't feel like an interview. There weren't any awkward, jittery moments. It was just kind of a natural conversation. And I think people enjoyed it. 2 things that I messed up on. Number one is just like, so I get the microphone, the audio quality wasn't the best. They told me this on Monday. I had 2 days to get everything together. Then I had to go to their offices and set everything up. Unfortunately, I'm a one-man show. So part of the reason I'm moving out in August is to have my own studio. And that studio, hopefully being close to New York, will have all the technicalities and logistics of video, audio done correctly. Unfortunately, we had to hold on to the mics and stuff like that. So that definitely in the future, hopefully we'll be able to have a more proper studio to make the audio sound better. And then number 2, and I don't even know why I did this, bro. Like I usually don't do this, but for some reason I did this. I kept saying right. Like after every sentence, I'd be like, right. Yup, right. And I listened back to it and I'm like, dude, why did I kept seeing right? Like, I don't get it. I don't do that, bro. If you listen to some of my other interviews, I don't do that. So I don't know why I did it this time. But yeah, after like the third time listening to it, I was like, this is kind of annoying, bro. Just like you don't have to say right after every sentence. So yeah, that we will correct in the future. But nonetheless, I think it was good. And I think people enjoyed it. Now, this was the part that caused the most controversy. I don't know why. Again, we're going to get into the overnight markets in about 20 minutes. That's when everything opens. I got a lot of topics that I want to talk about. We'll go through all them. We will talk about Webull because my goodness, what a mess Webull has been over the weekend. So we will talk about that. I have a lot of ideas and thoughts on what's going on with Webull. So we'll talk about that. I'm very curious to see how it opens. Very curious based on the news they announced on Friday. If that opens down 5% or up 5%. I'm leaning towards down because the market's down, but we'll talk more about what's going on with that. This was the part of the interview that caused the most controversy, and I don't know why. But here's the part that people were really upset about for some reason.
It's a little sad, but it's a great movie, and I love Lost in Translation.
I love that one too.
Yeah,
I love it.
which but I think that's the movie where I realized Bill Murray is genius. Like, because I totally believe that he was actually that person. Like, it's not him as an actor.
Right.
So
I don't get what people had an issue with. Like, multiple comments in this video were about this freaking 5 seconds. I don't get it.
Such a good movie. It's a little sad, but it's a great movie. And I love Lost in Translation.
I love that one too.
Yeah.
I love it.
Which
like, why do people have an issue with me writing down that I love that one too? And like, and agreeing, but I don't get it, bro. Like, I really don't get it. There was at least 30 to 40 people in the comments that were just angry about that moment. I don't know why, dude. Like, I don't know why agreeing with the guest is for some reason something that's like bad to do during an interview. Like, I think that adds to the comfortability of the interview. So that's what I did. I agreed with him. It's a good movie. I reaffirmed what he was saying. And I feel like, throughout the course of an interview, unless you like vehemently disagree with what the guest is saying, you tend to agree and back them up and affirm them. So that's what I did. Dude, I have no idea what Lost in Translation. I have no freaking clue what The Apartment is. Who the hell? Like, even Steve, I called. I was like, "You know The Apartment?" He's like, "No, I've never heard that." I was like, "What is The Apartment, bro? What are we talking about?" And then Lost in Translation, I was like, "What?" And then he said Bill Murray, and I remember hearing the name 2 weeks ago because Steve was on the market close, and he was like, "You never heard of Caddyshack, Bill Murray?" And I was like, what the hell are you talking about? And I wish I had remembered that conversation because when he brought up Bill Murray, I could have been like, yeah, Caddyshack was awesome. That would have really given me some credibility. That, if I had said, oh man, Caddyshack, amazing, he would have been like, yup, that was like, it would have been such a good moment. And it legitimately would have like, given me some street cred in terms of I understand these movies. I could have really used these conversations with Steve to my benefit. I don't know who the hell Bill Murray was. I still don't know who that guy. So it's like, it is what it is. But I played it off pretty good. I think I played it off pretty good. I think it wasn't too bad. Why do you ask about movies when you don't watch them? Because I wanted him to say Inception, Interstellar, Wolf of Wall Street, The Dark Knight, the movies that, people actually care about. High School Musical. I thought he would say some of those. He didn't. He said The Apartment and Lost in Translation. I was like, okay. I thought they would get a good response, but I didn't. So it is what it is. And I quickly moved on to the next question. I was just like, all right. People were asking what I was writing down. Dude, I was writing down Lost in Translation. That's what I was doing. I was like, that's what I did have questions on this notebook. Okay. I did have actual questions, but when he was saying Lost in Translation, I started writing that down. So I spit out my Diet Coke on, part of me knew that some of the OGs of the channel, because I had a feeling this video would get introduced to a lot of new people. And some of you guys that might be part of the live stream today, you might be new to the channel, subscribe for the first time. I don't really know movies that well, but I knew in that moment that this would be funny for my OGs. And so I think it was funny for my OGs. I think you guys enjoyed it. So it is what it is. It was fun. But anyway, no, dude, honestly, I really, really appreciate the love and support on the interview. It was a big one. I didn't know it would do as well as it did, but obviously that is the Tom Lee effect. People really care about him. He's, quite literally made people, I would think if you collectively added up, tens and tens of millions of dollars over the past couple of years by being the voice of reason, the voice of the bull market over the past 3 years, in the midst of the Morgan Stanleys and JP Morgans and Goldman Sachs telling you to sell. Tom Lee's been the opposite. So it was really fun. It was great stuff. Hopefully we get to do it again soon. And, it was a great time, even though I didn't know what Lost in Translation was. But It was fun. It was really dope. And again, I deeply appreciate everyone with the support. Like I did, I wouldn't have gotten this interview if there wasn't an audience that wanted to consume it. So, yeah, hopefully we can just keep this momentum going and try to get more of these in the future. But I'm personally proud of myself because after listening to it 5 or 10 times, I was like, okay, it was a good flow. Outside of me saying right every 5 seconds, it was a good flow. And if we can carry that flow into more and more interviews, I think more and more people are going to want to sit down. And that would be a good thing for overall this community, the brand, and the entire channel. So there you go. All right. So that's what we got with Tom Lee. We got a lot to talk about. 15 minutes until the overnight markets open. Dude, what happened over the weekend with Elon and Trump? I mean, I don't even know where to begin. We'll talk about it. There's a lot to discuss, but I don't even know where to begin. It was a lot. And I am really curious. All right, so let's do a poll right here in the chat. Where do you guys think Tesla opens? Because I think that is what everyone is curious about today. Tesla closed at what, 300? Tesla closed at, 315? This one's going to be an interesting one, dude. It might be a nothing burger. It might be a something burger. 312. Okay, so here we go. Where does Tesla open overnight? Let's do 300. Let's do 315. That would be flat. Let's do 290. And then let's do, I don't know, 285. What do you think? What do you guys think? Those are the 4 choices. Let me know what people think. Elon did like my tweet today. So I put out a tweet with some of my thoughts on this, and we'll go deeper into it. I got a lot of thoughts in terms of trying to understand how this is playing out, but I put out my tweet with my overall thoughts. Now, granted, before I read my tweet, I am not heavy into Tesla. And for those that are super heavy into Tesla, you're probably going to disagree with my take. I understand why, because you're going to be losing a lot of money if this thing gaps down 20, 30, 40%, which a lot of people are thinking is a real possibility. I think it's a possibility. I think it's being a little overblown in terms of how much people are obsessing over the fact that the stock's going to tank because of Elon's announcement. But I had a little bit of a different take. So we'll talk about what I said as well, and we'll keep going from there. All right, we got 12 minutes until the overnight market's open. Let's do Tesla. Let's set everything up. We'll talk about Webull in a bit. We'll talk about the tariff stuff, but I think we'll set up what's going on with Tesla. All right. Also, Rocket Lab, yes, very important. I mean, based on what's going on with Trump and Elon, they're back at it again. The market perception could be that SpaceX is not going to be the de facto launch vehicle for the United States government, which means Rocket Lab, ASTS, they might also catch a bid. Okay, so what happened over the weekend? Let's just set up some of the context. Elon officially introduced the American Party, is what he's calling it. And the agenda for the American Party is as follows. He responded to someone who commented beneath and said, is this the American Party platform? Reduce debt, responsible spending only, modernize military with AI, robotics, pro-tech, accelerate to win in AI, less regulation across the board, but especially in energy, free speech, pro-natalist, centrist policies everywhere else. Elon said, yeah. There were 1 million people that voted in Elon's poll, I think on July 4th or July 3rd when he put out the poll. July 4th, the big, beautiful bill did pass. That's another big thing that happened over the weekend. And we would be talking more about that if not for Elon introducing the America Party, which is a direct byproduct of the big, beautiful bill. But that did get passed. Estimates are that it's going to increase the national debt in the next 5 years to about 45 trillion. Elon said right here, by a factor of 2 to 1, you want a new political party and you shall have it. When it comes to bankrupting our country with waste and graft, we live in a one-party system, not a democracy. Today, the America Party is formed to give you back your freedom. And this was on July 5th. So this was yesterday that Elon posted this. Now, 1 million votes is not a lot of votes, which leads me to think Elon didn't really care about the votes. He was going to do this regardless. But the fact is he had 1 million people that voted and the majority of them agreed. And so now he's saying, all right, we're going to introduce the American Party. And on top of that, a statement of organization came out from the Federal Election Commission today. This is real. A lot of people have been saying this is fake. You can actually click on it on the website and verify it. This is a real statement of organization. I also think Elon would have denied it by now because it's literally been everywhere on Twitter. So unless Elon wants people to think it's real, it has the same CFO who is in Tesla, who is the treasurer of this American Party. So for all intended purposes, it is real. And it was applied for today, July 6th, which means he's really doing it. He's really doing it. Now, what was Trump's take about this? Well, Trump is, let's just say, not the happiest. Here's 30 seconds of what he said, and then we'll get into the actual Truth Social post where he really let everyone know how he feels.
Starting a third party. I think it's ridiculous to start a third party. We have a tremendous success with the Republican Party. The Democrats have lost their way, but it's always been a two-party system. And I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
Okay, now he had a much longer post, and here's what he said. I am saddened to watch Elon Musk go completely off the rails, essentially becoming a train wreck over the past 5 weeks. He even wants to start a third political party, despite the fact that they have never succeeded in the United States. The system seems not designed for them. The one thing third parties are good for is the creation of complete and total disruption and chaos, and we have had enough of that with the radical left Democrats who have lost their confidence in their minds. Republicans, on the other hand, are a smooth-running machine that just passed the biggest bill of its kind in the history of our country. Again, Elon's argument is that you are going to bankrupt the country by all the spending. It is a great bill, but unfortunately for Elon, it eliminates the ridiculous electric vehicle mandate, which would have forced everyone to buy an electric car in a short period of time. But Elon supporters would say that is not why Elon's upset. Elon is actually upset about the deficit spending, not about the EV mandates going away. He's also on public record saying he doesn't really care about the EV mandate. I've been strongly opposed to that from the very beginning. People are now allowed to buy whatever they want, gasoline-powered hybrids or new technologies as they come out. No more EV mandate. I've campaigned on this for over 2 years, and quite honestly, when Elon gave me his total and unquestioned endorsement, I asked him whether or not he knew that I was going to terminate the EV mandate. It was in every speech I made and every conversation I had. He said he had no problems with that. I was very surprised, which probably means he doesn't care about that. He's not starting a new party because of the $7,500 tax credit. It's probably for something deeper. Additionally, Elon asked that one of his close friends run NASA as well, Jared Isaacman, which while I thought his friend was very good, I was surprised to learn that he was a blue-blooded Democrat who had never contributed to a Republican before. Elon probably was also. I also thought that it was inappropriate that a very close friend of Elon, who was in the space business, run NASA when NASA is such a big part of Elon's corporate life. My number one charge is to protect the American public. All right, so Trump's argument right here is, hey, like, this guy is corrupt. This guy is trying to take over the American political system to have his own benefit. And ultimately, he's just mad that I don't care about EVs. I personally, like, maybe Elon's upset about the EVs, but this is what Elon just tweeted right now. I think it's a little bit more deeper. And what he actually cares about is, as he tweeted right here, what the heck was the point of Doge if he's just going to increase the debt by $5 trillion? And he responded to Dave Lee, who Dave Lee said someone close to the president ought to tell him the truth. Elon isn't mad about the mandate. He's upset about the $5 trillion. Of all the people close to him, I would expect VP Vance to understand this. He should make sure the president has his facts straight. I mean, Vance knows this. Trump knows this as well. But they're not going to come out and say that $5 trillion is like the biggest issue in the world that they should be resolving, because then that would deny the legitimacy or the potential of getting them that big, beautiful bill. So what are my thoughts on this? We got 6 minutes until the overnight markets open. I put out a tweet. Elon did like this tweet, so I would imagine he agrees with it to an extent. Again, if you are heavy in Tesla, you are not going to like my take, but nonetheless, this is my take. So Elon tried to infiltrate the bureaucracy that is the U.S. government with Doge. He realized that Democrats and Republicans both will continue to spend recklessly and nothing can be done about it. His solution, which is actually quite logical, is forming a new party. That party likely will only need to win a few seats in Congress, maybe 10 to 15. Quite frankly, all they need to win is 2 to 3, to disrupt the ability for Democrats or Republicans to pass legislation that doesn't put a focus on fiscal responsibility. 10 to 15 senators in Congress is enough to get rid of any majority, no matter who is in power. Remember, the recent Big Beautiful Bill only passed because Vance broke the tie. Even with the Republicans having a 53-50 majority, they lost 3 votes, which means Vance had to come in to make it 51-50. He doesn't need to control who ends up becoming the president. He needs pro-fiscal sane senators to stop deficit increases within every new piece of legislation, because again, the executive branch can only do so much. Congress has the power of the purse. If Elon were to spend some money and get his American Party representatives into the House and the Senate, you wouldn't be able to get things passed unless you get their votes, which means he would effectively have control over the deficit spending. Now, is this bad for Tesla shareholders? Perception-wise, yes, because the street will think he's distracted, which I don't know. We're going to see how the market opens in 5 minutes. Maybe it gaps down. Maybe the street doesn't care. But the chatter on Twitter over the weekend was that the street's going to be so upset about this. But if all he needs to do is allocate $1 billion of his capital to get 10 to 15 senators from the American Party elected, I do think he could do that while advancing robotaxis and Optimus, which are the next S-curves for Tesla. Like, I don't know how those get disrupted if Elon's also doing this. Regardless of market perception, if it does get some level of, oh, Elon's distracted, I think that could create one of the most fantastic dips to buy on Tesla. Because if the story is the story, but the market thinks Elon's distracted, but the growth of robotaxis and Optimus over the next 5 years continues to be what people think it could be, I mean, ultimately the cash flows are gonna be what matters. If you are heavy in Tesla, you might be upset, and you deserve to be upset. But also, do we really want to have $50 trillion in debt over the next decade with zero Zero way to stop. I mean, the Republicans are supposed to be the ones who are supposed to be fiscally conservative, right? We know the Democrats are going to spend as much as they want, but this is a Republican bill that is going to add this much to the debt. So I kind of understand Elon's point. I think this can work. Obviously, if he can't get his senators into Congress because they don't get the people in their jurisdictions to vote for them, then this fails. But if he does, it could be something that changes the course of American history. Now, this is a very optimistic take on this. I know a lot of people probably disagree with this. I get it. And I know some people are saying, well, if Elon's focused on growth, on GDP acceleration, AI, et cetera, that can overcome the amount of debt spending we're doing, that can overcome the deficit. A lot of people are saying the debt and deficit don't even matter because everyone's going to buy U.S. treasuries. I get it. I'm sympathetic to those arguments. I'm just saying, if Elon's going to do this and you can't do anything about it 3 minutes until the market opens, then he's going to do it. And I don't think there's anything, any shareholder can do about it. I mean, the only thing that could happen theoretically is the board of directors comes out and replaces Elon. And that chatter has been happening over the weekend. I think that is the dumbest shit I've ever heard of. And this is my opinion. You can disagree, but this stock trades at a pretty aggressive multiple, not because of robotaxis, not because of Optimus, not because of energy, not because the logo looks cool. It's because of Elon Musk. Like, there is a massive Elon premium to this stock. And if you believe it trades at these ridiculous multiples compared to the GM and the Fords because of all this technology, it's because of Elon's communication that technology, how many years has he been saying, hey, it's going to change the world, going to change the world, going to change the world. And people are like, okay, take my money. I'll buy the stock because I believe that one day it's going to change the world. And so far, it has meaningfully changed the world. It's just, it hasn't led to the massive S-curves of growth that people are hoping for, because that's just going to take more time. But if you replace Elon with some suit and have them try to execute on Optimus and Robotaxi, maybe that works out. But I think that day, that premium that is just that people blindly give to Tesla purely because of the faith in Elon, I think that goes away in a second. And yeah, a lot of you guys are saying right here, without Elon, I'm out. Right? I mean, I'm not buying Tesla. If Tesla dips to 240 and Elon's gone, I'm not touching that thing with a 10-foot pole. Now, if Tesla drops to 240 and Elon's there, I will start buying that 100%. Like, I have my levels, and I'm very curious to see if we get there. I kind of am skeptical since everyone is saying Tesla's going to drop. Maybe it does. Maybe it's not that dramatic. But if Elon's not part of the story, I don't want to be part of Tesla. And I think a lot of institutional investors as well agree with that, given the majority of the stock is retail anyway. So it's like, how many retail members blindly trust Elon? I would say a majority of them, a heavy majority of them. So this is going to be a very interesting saga. We thought everything was over after the Epstein tweet, and then he apologized. But no, he was serious about starting the America Party. We got a minute until overnight markets open. Now he has officially started the America Party. Maybe Elon gets bored of this and he moves on, which I think is also very possible. Elon could legit just be like, I don't feel like doing this anymore. I mean, we've seen it happen in the past. But if he doesn't, then I think markets are going to have to react to it. And if it creates a juicy dip opportunity, then I wonder how many people are going to take advantage of that dip. And I think that's what we're going to have to see over the coming weeks as we navigate Tesla. Also, we have earnings. Dude, we have earnings starting this week. Delta earnings are like on Thursday. So we are back in earnings season. On Thursday, we start earnings, and then next week we have the banks and some of the tech companies start, and then a week after that, we have Tesla, Google, all of them start. So basically in the next 2 weeks or in the next week, we begin earnings, and we're now going to have to see how the market reacts to it. All right, folks, here we go. Overnight markets, Sunday, July 6th. Thank you, everybody, for being here. The markets are now open. Tesla opens down 5.27%. 5.27%, went from 312 to 300. It hit 299. Now it's at 304. 303. All right, so it's struggling to hold on to 305. You do have some dip buyers immediately at 300 that came in. Now it's down 3%. But it is down about 4%. Palantir up a little bit. Robinhood down at 1%. Nvidia down a little bit. Nvidia did hit all-time highs on Thursday. S&P 500 down about 0.32. AMD 137. That's basically flat. Webull, that stock, which we'll talk about as well, is not trading overnight on Robinhood. Is it? I don't think it is. Well, it's basically the same price it was on Thursday. So if it is, then it's flat. Google, grab right here, 48. That's up a little bit. Google right here, 179. SoFi, 1842. That's down 1%. AMD, that's also down 0.07%. You guys said Elon just tweeted that the filing is false. Okay, I guess Elon, that actually could be good for Tesla, though, if he just clarified that the filing is false for the America Party. Oh, yep, he did. All right, there you go. The filing is false and has been reported as such to the FEC. Okay, there you go. That's false. That actually could be helping Tesla That could be one of the reasons. Well, no, never mind. Tesla's down to 290. I thought that was holding it at 305. Nope, that's down. 295. Okay, so we do have clarification that Elon said the filing is false. So there you go. The American Party has not been filed for yet, which could be an argument for why Elon is actually not starting it. But ultimately, we're going to have to get confirmation because his other tweets are saying that he is starting this party. Robinhood basically flat overnight. Palantir 134. Reddit right here down about 1%. Meta's down 0.5%. Salesforce down 0.24. Circle is flat. Microsoft is down 0.19. MicroStrategy, that's up a little bit. Where is Bitcoin? Bitcoin actually was doing very well over the past couple of days. 109. So Bitcoin right here, 109, trying to recapture 110. HIMS is flat. A lot of stocks are flat. Roblox down 0.5%. CoreWeave down 0.5%. Coinbase down 0.18. I mean, these aren't really big moves. Rocket Lab, I believe, is trading. Rocket Lab is up a little bit. Rocket Lab up about 1.6. Not too bad. NVIDIA down 0.36. Tesla 297. Tesla 297. Tesla 297. UNH is also basically flat. UNH is also flat. Webull down 8%. We will talk about Webull. This one had some pretty nasty news come out over the weekend, so we'll talk more about that one as well. Palantir right here, 134.56. That one's flat. Robinhood 93.93. AMD 137. Amazon 222. DoorDash right here is flat. You got pretty much everything that's either flat or down 0.5%. Tesla's taking it the worst right here, down 5%, 6.2% now. Oscar 1650. That's up a little bit. Lemonade is down a little bit. QBTS, some of the quantum names, that one does not trade overnight. Joby, that one right here is also flat. Robinhood right here, 93.84. Rocket Lab's pumping. Okay, Rocket Lab's pumping, 36.30. All right, Rocket Lab getting some love. Rocket Lab getting some love. Yeah, we'll talk about Webull. I mean, this is an absolute disaster, and we will talk about what's going on right here. Down 10.84%. We'll get into it. I have a lot of thoughts on this, so we'll go deeper into it, and we'll try to see if there's any solutions to some of these issues. TFC right here, 45.54. Duolingo 392. Reddit 156. Tessie 296. Again, down 5%. I mean, it gapped down 5.8. I guess it's bad. I don't know if it's as bad as some people thought it was going to be, but probably after Elon confirmed, even though he's denying the filing of the America Party, he is confirming the America Party is going to happen, and that right there is getting Tesla making hit. And that one is down 297. 297. ASTS doesn't trade overnight. BMNR, I don't think trades overnight as well. BMNR, does it? Does it trade overnight? That's at 10.2%. BMNR. No, it's flat. 120. That's flat. That's flat. BMNR is flat. Okay, cool. Well, no, why is it trade? Okay, on Legend, you have some people that trade it, but overall, it's not traded. Legend allows you to trade some stuff up and down on their trading version of it. Basically flat. It closed at 120. That's flat as well. Big Bear AI, that's also flat. I believe that does not trade over the weekend. Bitcoin right here or overnight. Bitcoin still at 109, so that's doing well. MicroStrategy getting a little bit of love. 404, back above the 400s, and then NVIDIA 158. NVIDIA 164. It becomes a $4 trillion company. It hit 160.98 on Thursday. So NVIDIA looks like it's ready to bust through all-time highs and get to 4 trillion. But we're going to see how that ends up playing out. Robinhood right here at 93.70. I would not be surprised if Robinhood takes a breather. I mean, it's had a hell of a week. We got to 100. Last week was pretty special for Robinhood. But if that one relaxes, I think that's okay. Tesla right here at 295. Palantir has been kind of stuck in the 130s ever since it had that 10% drop based on the rebalancing in the Russell. I guess people use that as an excuse to sell. That one stuck at kind of 134, 135-ish. Grab right here at 490. SoFi 1855. That's flat. And S&P down about 1/3% as well. Why did Hood dip on Thursday? I mean, I think after hitting all-time highs, people took profits. I don't think it was anything fundamental. Especially because the markets hit all-time highs. I mean, dude, Robinhood is half the market cap of Schwab at this point. And I think it's justified given their growth. And I do think they can end the year much higher if they get into the S&P and all the other different stuff they have coming out. They have more events this year. But taking a breather is okay. The stock has rallied 140% year to date. I think if it chills out in this range, even in that 85 to 90 range, that would be pretty good. I would not be surprised if it falls below 85 back to 80, especially in August, September, if we get a little bit of a bearish market. And we'll talk more about some charts and historical patterns going into the end of summer. But if it can hold the 90s for July, I would be very impressed. I'd be very happy because that's doing a good job normalizing at those levels. Tesla right here, 293, down 6.9%. AMD, that's down 0.5%. S&P still down a third. Tesla getting hit the hardest, down 7% on the day. HIMS is flat. HIMS is not doing anything. A lot of these stocks are flat. Not a lot of them are moving. They're moving just with the futures, which are down a third of a percent. Tesla is the one that's getting hit the worst. Webull, based on the news that it announced, down 10%. We'll talk about that one, 1280. And then Amazon right here, 222.88. That's what we got. Yeah, Elon said reports of the American Party filing are false. I think if Elon came out and said, hey, I'm not coming up with the American Party anymore, Tesla would stop tanking. But even if he didn't file it officially with the Federal Election Committee, which is somewhat good news to Tesla shareholders because maybe he's not that serious about implementing it. The fact of the matter is, over the entire weekend, he's been saying that, we're going to have an American Party. And that's why the stock is down. That's why the stock is down. Okay, so let's talk about Webull. Let's spend 10 minutes on Webull, then we'll get into all the tariff stuff. I know a lot of you guys are thinking about this. I have a lot of thoughts on this as well. And we will then go further from that after Webull. So let's discuss and see what's going on. First of all, I want to start off with this. How many times have I said throughout the course of the past 2 months, I think those that are here every single day, you can attest to this, don't chase. Don't chase. Don't chase. Drink your liquor straight. I don't care if BM&R is running. I don't care if Big Bear Eyes. And I've been a manifestation of what I'm preaching. Don't chase, because I've not chased anything. Because chasing always leads to some stupid shit happening. And it leads to it's just a toxic investing philosophy because you don't have any fundamentals about why you're investing. You're purely just chasing. And then what did I do on Friday or on Thursday? I chased. For the first time in this entire 3-month bull run. I mean, the only thing I've been buying has been Palantir, Hood, Nvidia, little bit of Tesla, UNH, and Grab. And I think a little bit of Rocket Lab. That's it. This is just core convictions I've been adding to. And what I did on Friday or Thursday was, all right, screw it. I'm going to buy 1,000 shares of Webull, quite frankly, because of Chris. I mean, I said that on Thursday. I was like, look, this is my boy. He's super bullish on it. Whatever, I'll buy. The reason that this has reminded me to not do that, even if it's one of your best friends, is because you don't actually know what you're buying, which I don't. Like, obviously, it's not that hard to understand Webull's business. But at the end of the day, if you don't understand the ins and outs, which to a little bit of my credit, I kind of saved myself on Oscar when this thing ran up to 21 Oscar, down 3% right now, 20, 22, 23. The FOMO was there. Trust me, the FOMO was there, but I didn't buy it because I don't know anything about freaking healthcare and the ACA. And if I don't know anything about that stuff, then why would I buy? Now it's down. I couldn't even tell you exactly why it's down outside of the big, beautiful bill, ACA subsidies, but that's just me throwing out buzzwords. I can't actually explain why Oscar is getting hit because I don't know about it. And so I stayed away from it, which is like the responsible thing to do at the end of the day. If Robinhood dipped, if Palantir dipped, if Nvidia dipped, given I have heavy positions in those companies, I could probably analyze it and I probably would buy that dip because I want to add to those positions over the long term. What's going on with Webull? What happened with Webull, and I think if you did some more fundamental due diligence on this, you would understand that this could happen. Granted, I also think that this was crazy that it happened after hours, and that's why it's down 10.3%. And no one really could have predicted it, but nonetheless, this is why you have to trust your intuition. Basically, what I'm trying to say is I didn't trust my intuition, and it led me to be back holding out. They filed a dilution offering, and essentially the terms of dilution are they have the ability to raise up to $1 billion by issuing stock. So that is dilutive. They have not literally issued the stock yet. It's kind of like a shelf offering, right? So it's on the shelf and they can do it whenever they want. And that's fine. That's not even that big of a deal. It's 2.5% discount to the premium on the shares, which means whoever is buying those shares gets a little bit of a discount and Webull gets to raise $1 billion. If you believe in Webull's growth story and that they want to take over the world of brokerages, then having an extra $1 billion is a good thing. However, and Tevis did a really great video on this, they raised the money from Yorkdale Capital. And if anyone knows any history about them, this is just one of the most predatory investment firms on the planet. Every company they've partnered with, Newsmax being one of them, has done very bad, VinFast being another one of them. And they've just been horrible partners to work with. The real sad part about this Webull situation is they just raised, I don't know how much they raised from going public, maybe a couple $100 million, but they have $1 billion in cash. So they just, Yorkville, sorry, not Yorkdale, Yorkville. They just went public like a couple months ago. They have $1 billion in cash. Why are you partnering with some random firm that has a very, very shady history of how they do offerings and the companies that they work with to raise an extra $1 billion of capital? Like all of it screams just like ugliness, right? And quite frankly, for Chris, who is going to be exiting his position, it is a thesis breaker. It's a complete thesis breaker. And for Roy and Tevis and a bunch of these people that got excited about this name, it is a thesis breaker. Now, on Friday, if you listen to the market close, one of the reasons I wasn't excited about buying Webull is because we looked at their numbers and they're only growing options and equities 15 and 8%, which is nothing. Robinhood in the month of May alone grew options 36% and equities 108% year over year. So, like, to me, it just made no sense to be super excited about it. But nonetheless, I bought it because I was like, all right, whatever. It's kind of one of those, let's buy for the hell of buying it. And it's just a lesson that shit can get you screwed every time. Because if I had done some real due diligence, like, do I think Robinhood would ever do a predatory dilutive filing like that? No. Could they do that? Sure, that could happen. But also, I know the company so well, I can almost guarantee that's never going to happen. With Webull, I don't know who these guys are. I don't understand why they did this because I have spent zero time actually studying the company. And this is what happens when you chase. Now, sometimes if you chase a big bear AI at 5 and it goes to 7, or it's at 8 right now after hours, you feel like you're on top of the world. You feel like you don't need to do that due diligence, which is the addictive mentality of chasing and kind of trading in and out of stuff. And some people are amazing at it. Some people are great. They look at the technicals, they can do it. Other people just follow the trend. And sometimes they're left bag holding at that trend because it just doesn't work. Like if you bought BMNR when it got to 160 on Thursday, now it's at 120. I mean, could it get back there? Sure. Now, if you bought it at 4, you're really happy. But if you bought it at 160, you're not. And this is the problem with chasing. A lot of it tends to be a matter of luck as well. And so what is the solution now with what's going on with Webull? Well, first of all, what are some of the lessons learned? Number one, it is just reinforced to me again, like this is why I don't chase. Because the one time I do, even if it's because I have a good friend who says he's bullish on it, it's not a good thing to do. Every time, and yet I'd rather see it go to 20 and me not chase it than deal with this type of situation because it is what it is, right? And you just feel annoyed by it. Number two, so that's the first lesson. Number two, and I think this is also really important as well to kind of factor in how this is playing out is position sizing. So thankfully, I only bought 1,000 shares, so it is what it is, right? It's a very, very small position for me. I hope a lot of people did not go super heavy in it. But when you are chasing like I did, it wasn't like, hey, I'm going to put $80,000. Like, no, I put 15 grand. It is what it is. If I lose it, I lose it. But hopefully that doesn't, ruin the entire portfolio or ruin the entire performance for the year. So I think one thing that if you are going to chase, but is inevitable sometimes, just for the hell of it, then position sizing is very important. Number three, and one thing I also am very proud of, and this is just something I want to say publicly right here because I need everyone to understand this. I heard about the Webull thesis at $10. Okay, Chris called me and Steve when it was at $10. I could have bought it at $10. I could have loaded up my bags, and then we could have introduced it to the audience after a 40% run when it went to 14. I did not do that, and I will never do that. And the reason for that is because I would feel like absolute garbage if you guys bought it at $14.50 or whatever on Thursday when we introduced it, when we unveiled the thesis, and I'm already loaded up and I'm up 40%. Because at that point, to me, it's literally like pumping your bags, right? And there's a difference between being bullish on something and like introducing the DD and getting people to understand it, all that stuff, versus loading up on something, introducing it to an audience, which I just can't deny at this point. There's thousands of people watching the stream. Like, I don't think I move the markets by any sense of the imagination, but there are people watching, and there are people that will make decisions based on me even, doing a stupid, all right, I'll buy 1,000 shares. Like, some people bought 1,000 shares with me, and like, it is what it is. I have a bigger responsibility at this point, and I need to understand that. And so I'm happy that I bought it on Thursday live because I'm bag holding with everyone else. If you did buy it, battery exhausted. Does a Tom Lee interview, can't even get the camera to be freaking... Dude, this camera is a new camera. The old camera was being stupid, so I replaced it with a new camera. The new camera is being stupid. I need a new studio. I'm getting tired of this shit, bro. 1 month left. We're getting a new studio. I don't care how much money I have to spend on a camera. We're going to get a freaking good camera that doesn't have the battery exhausted. This is getting ridiculous. Anyway, I'd rather be bag holding my 1,000 shares that I buy. No, the camera is plugged in, bro. Like, I'm so tired. The Sony a6400 is sucks, dude. I am buying an expensive camera. I'm tired of these $1,200 cameras. I need to buy a $10,000 camera. Just have it never die. It's getting stupid at this point. But anyway, I'd rather be bag holding the 1,000 shares I bought at $14.50, now at $12.80, versus have a $10 average, sell right now at $12.80 if my thesis broke, and then you guys are bag holding because you bought it at $14.50 because you bought it at the same time as me. So one thing I just want to clarify is I will never initiate a position before I tell you guys. Like, if I initiate a new position, because I just have to accept the responsibility of the fact that a lot of people are watching these streams and they're probably going to follow and they're probably going to care. I don't really buy anything unless I actually know something about it, unless it's like, an earnings gamble. Like we bought 100 shares of Nike. That's for fun, right? And everyone knows we're gambling. We're very clear that we're gambling. But if I'm buying a real position, you guys will know about it the day of. There will never be any, a mid bought on last Friday and now he's introducing it, because I just don't like that feeling. I don't like that feeling. And so regardless of me bag holding these stupid shares, at least we're bag holding together. I know that's not the best feeling, but it's you guys can trust that I did not buy this at 10, introduce it on Thursday when it was at 14, and then I'm going to get out with a 20% profit while you guys are down 20%. No, we're all down 20% if you did buy it at 14. Having said all of that, how the hell do we get out of this situation? Okay, the way we get out of the situation, and this is where I have to be very nuanced here, and I actually think the one silver lining that I'm happy about this is that we get to learn from this, and we get to use some of the stuff we've been learning about options to also learn from this. Okay, if Webull max pain tomorrow is $12, I'm just going to assume max pain tomorrow is $12. What I will be doing to try to recoup some of the losses, because I don't want to be in this name, I want to get the hell out of it. I didn't trust it in the first place, and now what they did over the weekend was just ridiculous, and now I'm getting out. I will be selling the $10 in the money call option. We talk a lot about covered calls on this channel. Covered call is an obligation to sell your shares at a set price, and you're collecting premium from the person who's buying that call for July 18th. For July 18th. Now, why am I going to be doing that? So here's what I want to show you guys right here, and hopefully we can use this as a little bit of a learning lesson for all of us, and maybe even potentially break even. So this is the $10 call right now on Webull. Okay, it's worth $4.33, meaning if you were to sell an in the money call, why is it in the money? Because if you bought it at 12, or well, not even if you bought it at 12 or 14, the stock's at 12.75. Webull, you're selling a $10 call. So if you're selling it below the current price, your strike is below the current price, that is in the money. On Robinhood, you can simulate your returns. Okay, so if Webull were to open up at 12.75, which is the current price right now, this call option would be worth $2.79. I have 1,000 shares, which means I can sell 10 contracts. If I were to sell 10 contracts at 12.75, I would pick up $2,800 of premium, right? 279 times 10. Now, I bought my shares at 1450, so 1450 going down to 10 is $4,500 that I'm losing. If I sell the in the money call and I'm picking up 2,800, 4,500 minus 2,800 is a loss of only 1,700. Now, let's say this thing goes to freaking $12. You can still pick up about $2 of premium, which is $2,000 for me because I have 1,000 shares. If it drops anywhere close to like 1150 or 10, then obviously this thing just starts to, deteriorate, and it's going to be a lot harder to get some premium, but we're going to see how bad it opens up tomorrow. And hopefully it stays at these levels. Then we can generate some of that premium. Now, what do I mean by break even? If I can pick up 250 tomorrow, all I need is 150 to break even because I'm down 4,000 on the share. So $4, 14 to 10. I need to break even, which means I need to collect $4 of premiums. So here are the risks here. Let me explain the risks first, and then we'll get into how this works out. The risk is, let's say you sell that $10 call, and then tomorrow it rips up to 15. You're kind of screwed. Everyone needs to understand this right now. This is where you either believe in Webull or you don't at this point. If this thing bottoms at like 12:30 tomorrow and then rips up to 14.15 and you sold that $10 call, you're done because now you are contractually obligated to sell those shares at $10. So that's the first thing. I don't think it's going to do that. I could be wrong. Quite frankly, I don't care if it does that because I just don't know enough about the company at this point to even make a judgment on that. I think it could tank, but I think max pain is around 12. If it goes below 12, below 1150, I would be very surprised because I feel like it was a bad thing that they introduced on Friday. I don't know if it's that bad to tank this thing like 25% tomorrow. If you sell that $10 call and you pick up $250 of premium, and you can then wait 2 weeks, July 18th, and then roll it for another $1.50, meaning you don't let those shares get called away, you can break even. If your average is 14, if your average is 13, you need $3. If your average is 12, if your average is below the price right now, I personally would get out, but it's up to you how much you believe on Webull or not. So this is actually, I think it's a learning opportunity of just like people, you don't always just sell calls to collect premium to generate income on your shares. You can sell calls to kind of break even from a shitty situation that currently I'm in, which is that I'm going to be probably down $4 a share if this thing tanks to 10. And how can I sell those calls at the right time to then collect that premium? The other risk here is, let's say I sell that $10 call and then someone exercises my calls. Then I'm screwed, right? So let's say I collect $2,800 of premium, but on July 9th, which is 9 days before the expiration, someone exercises my calls. I contractually have to give those shares up at $10, which means I will still take a $1,700 loss because I don't get the chance to roll for the extra $150. Now, granted, that might be rare because given there's time on the contract, people might not want to exercise. If you can get some more of that theta decay, you're kind of playing against the market. Then before July 18th, July 17th, you can roll again for that extra $1.50. You collect some of that premium, and then you break even in and of itself. And then you let your shares get called away at 10. You bought it at 14. You collected $4 a premium. You break even. It might take you a month to break even, but nonetheless, that's how this can play out. The other thing you can do if you don't want to play the weeklies on this is you can go to like an August 15th call, and that August 15th call, you might end up getting the $4 right there, but you just have to hold the stock for longer. So if we go to Webull and we go to August 15th, which is 40 days out, let's do August 22. Let's see if we can get some more time premium. Well, see, you might not be able to do exactly what I'm thinking you want to do. See, this is the weird part about this because Webull does not have tons of liquidity. I mean, August 15th is a little bit of a better date, but that $10 call is only giving you $4.30 of premium. Based on where it opens tomorrow, it could collapse just based on the IV. If we're looking at it right here, yeah, tomorrow it's going to open up at 282. Which is almost the exact same thing as the July 18th call. So a lot of this really depends on implied volatility. I was hoping this would open up at like 350 so you can get a little bit more premium, but it might not have as much liquidity, which is why the market makers are taking it down more. So there's a lot of different, factors that go into this. The one that I've been looking at all weekend is July 18th, $10 call. Hopefully you can collect $2.50 to $3 a premium, wait a couple weeks, roll it for another $1.50, and then you break even. And that's what we got. That's what we got in the context of Webull. So those are my thoughts. Here's the lessons. Number one, don't chase, even if it's a good friend that, is excited about something. Ultimately, also for everyone blaming Chris, look, you can't blame Chris. At the end of the day, you can't blame someone else for your decisions. We have to accept responsibility, right? So I am not blaming Chris. I might give him some shit for this because I'm his friend, but I'm not going to blame Chris because at the end of the day, I'm the one who bought the shares. Like, you have to be I don't blame Chris for me being up on Palantir and Robinhood. I don't blame Chris for me being down on a stock. At the end of the day, you have to accept personal accountability. So although it's annoying, I will acknowledge that you guys heard a thesis and then the thesis immediately was like fucked, to be honest, after hours. I get it. That's annoying. And I don't even blame Chris for that because I don't think he expected they were going to partner with Yorkdale Capital and just like have basically the Trevor Milton of investment firms be the people that could give them $1 billion of capital in a very predatory way. I don't blame him for that. But granted, that also comes down to DD, right? If you've done a lot of DD around a company, maybe you could see that coming. Maybe you don't, maybe you could. But the point is you can't blame other people for that. So I think that the key lessons from this are, number one, how do you learn how to not chase and have that mentality? Because sometimes it works and then you feel on top of the world. Sometimes it doesn't, and then you feel like shit, right? That's number one. Number two, how can you use covered calls to hedge against some of the pain, which I think is actually the first time I've even utilized a strategy like this. So I think this is going to be an interesting experience for me to see, can I get myself out of this crappy situation by collecting premium from the markets? How do I deal with people potentially exercising early, yada, yada. So all that stuff is something to learn from. And then number three, you got to accept personal accountability. And so I blame no one but myself for doing this. The one thing that I'm very happy about is I did not buy this thing at $10 and now I'm getting out at a 20% gain, while some people who heard about it on the stream for the first time bought it at 14 and now they're down 20%. Like that, I just can't handle. Like, just personally, that just makes me feel like shit. And so I think the other lesson from that is no matter when there is a new thesis that's introduced on the channel, you will know if I'm buying it or if I'm not buying it when I actually buy it. Not, I didn't buy Oscar and Lemonade and then do a deep dive and say, hey, look how great these companies are, because I just, that's not the way I want to do this. So there you go. That's what we got. Again, I know I see some of you guys in the chat blaming Chris. You can't blame Chris at the end of the day. Like, no one's blaming Chris for ASTS going from 25 to 50. No one's blaming Chris for Carnival going from 15 to 30. It's like, you're gonna have some wins and some losses. It is what it is. It is what it is. And I don't blame Chris for anything. I don't blame Steve for any picks that he's made that maybe have not gone the best. And I give him a lot of credit for the ones that do well. But like, this is a hard game. You're gonna have some shit that goes the opposite direction. I just want to make sure that I accept my responsibility that a lot of people are watching and will blindly do what I do. And I just need to accept that. And I don't want to buy 1,000 shares for the hell of it of anything anymore, unless it's purely classified as a gamble. Because if it's not, some people will follow it and think it's an investment. And then if I don't know why I'm buying it, which I didn't know why I was buying it outside of the pure fact that I wanted to chase, other people will actually think there's a thesis. And then if I want to get out of it, people will be upset, right? And so I think from that perspective, that's how we navigate this situation. Raising money is not even close to a bankruptcy risk. Webull has insane IV. What, shouldn't you just sell weekly calls against it and yield farm? Look, here's the other thing. Let me just say this right here. This thing could rip tomorrow. It could go back to 14, 15. I went on stock twits all over the weekend. The Webull Colts, they are convinced this is the greatest thing ever. They are convinced this $1 billion is the best thing. They're going to raise all this money, blah, 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 blah. I don't care anymore because I don't want to be in the name. It's not like it's an earnings play. It was just let's do it for the hell of doing it. My research over the weekend, I would highly suggest people watch Tariffs' video. He did a great 30-minute video talking about the firm they partnered with. They feel predatory, and I don't trust Webull for partnering with that firm because that firm is a piece of shit. That firm is quite frankly a piece of shit. And as a result, I just I don't trust them. So from that perspective, that's not the easiest reason why I would talk to them. I see Chris in the chat. Let me give a call to Chris. We'll get his take for like 5 minutes, and then we'll get to some of the other topics, and then we'll keep going from there. But let me give him a phone call, and he can also explain his reasoning on how he's navigating Webull. Thoughts on BMNR? I think it can keep running, but it's up like 30x, bro. It's up a lot. So at this point, I don't know. Webull is okay. I'll send a StreamYard. Webull is Webull is a Chinese-owned company. That's correct. And that's another reason, bro. At the end of the day, it's like some of these Chinese companies, bro, they're full of shit. They just are. And that's not being racist towards Chinese people. That's just like some of these Chinese companies are full of shit. And they do this stupid shit where they dilute in this way. They take advantage of American capital because there's a lot of capital in the United States, and they do what they do. So it's another reason sometimes you just stay away, bro. You just stay away. And it is what it is. This is how they navigate it. But regardless, again, the argument is don't chase. And when you get into these chasing situations, like if Webull was at 16, I would seem super smart. I'm up $4 a share. I'm up $5,000. But that is a temporary high that doesn't last. It's not sustainable in investing. And to Chris's credit, he thought of Webull as an investment. He never thought of Webull as a trade. He thought of it as a legit investment. It's just what they did over the weekend completely ruined the entire thesis. Chris, you're live.
Man, let me tell you, I did not see what was happening on Thursday happening. I mean, otherwise I wouldn't have had vertical spreads nor would I have spoke about it. But this is just how the market is, man. Sometimes you craft a thesis, you look at all the numbers, you double check everything, you ask people that and things can go a little haywire. The funny thing is, this is not the end of Webull. Like, it's not going away. It's not one of those companies that's like a Trevor Milton kind of a fraud where, they're rolling an SU like a truck down a hill. This is a real product. Real people use it. There's a lot of people that are actually on it. It's a real platform. So it's not one of those things that's just completely vaporware. The question of who is financing this deal is the main reason why I'm somewhat, I want to say like bearish, but somewhat less happy about where this company's prospects are going forward, right? And that's why, like, even the position that I have, me, I have vertical spreads going all the way from $10 to $30 because I figured, hey, this was actually a very undervalued position. And so, I took a nice position in it. What will I be doing on Monday morning? Probably looking for some options plays where I can kind of compress down the spread and basically take most of the money out of the investment and probably just leave a few dollars in there. Because the one thing I've realized over a long period of time is that in the short term, a lot of this stuff tends to be very, very short term in nature. Management could come out and said, look, we made a mistake. We didn't, we shouldn't have partnered with them. And boom, now the stock is up again. Right. Yeah. And that's the kind of things that happen with the market. And anyone right now is thinking, these kinds of things are predictable. They're not predictable. Like even the Tesla people right now, who could have predicted that Elon was going to pick a fight with Trump after literally spending hundreds of millions of dollars supporting the guy. Right now, for some people, that's a thesis breaker. There's a lot of
Webull is up 20% over the past week, so it's giving back some of the gains, but it was up 40%, including.
Yeah, and if you look at the business fundamentals, they were trending in the right direction. They've had some catalysts that were up and coming that could theoretically help drive the price higher. Also the sympathy trade with Robinhood was there, so there were a lot of positive things that were associated with the name, and really it started to pick up steam. And I honestly believe, had it not been for this news, it actually would have kept going, and it would probably topped out somewhere. But just remember, this is a legitimate business. It's I know a lot of people right now are dunking on, oh, it's a Chinese company. Well, their founders are Chinese, but it's listed here in the US. All of their leadership and their CEO and stuff, they're based here. They're certified by FDIC and SIPC, so you're not going to lose your money if you have money in Webull. So yeah, I think some of this stuff is just short-term noise. And look, a 5%, 6%, 10% correction, that's way more normal than people think.
No, that part, I don't think anyone's mad about that. It's the reason why. And so just to be clear, because to be transparent, you are getting rid of your entire position. Is that what you're doing?
No. So like I told you, I have vertical spreads going from $10 to $30. All right. And these are leaps. My strategy when it comes to this stuff. I typically go on the side of leaps for this specific reason. If there is some kind of news that comes out, I can always compress those leaps down and take a good.
So to make it easier for everyone to understand, you're buying back the calls you sold short, and you're leaving the calls. Okay, so how much of the original position are you leaving open? The long calls. How many of them as a percentage of the overall?
Probably only 20% of it.
Okay, so you're selling 80% of the position. That just
yeah. So this way now it's like, okay, I've lost the thesis on its long-term, prospects. And I think that, in the short to medium term, there could be some volatility that helps me get out of that additional space. And like I said, I'll evaluate the thesis 3 months, 6 months, 9 months from now, So their earnings are coming up in August. They could clarify a lot of things on there. That's another thing. The crypto launch is happening. So, I think a lot of times people, if you bought in something and it just dips because of some kind of news, and it's one of those things that you have to make a choice as an investor. The one thing I'll say is, sometimes I do feel a bit bad. It's like, oh my God, I can't believe I got one wrong. But then I have to remind myself, that's one of the things that we do as content creators. We talk about these names. We try to figure out if there's value there, if there's something that could potentially return a high level of return. And sometimes we get things wrong. And when you get things wrong, it's, it is what it is. People will never say like, oh my God, Chris, you saved me from Enphase. Like Enphase with 300, and I was screaming at everyone like, hey, Enphase is not really a great place to be because it's really propped up by high natural gas prices, and then it sinks 70-80%. But do I blame anyone who bought Enphase? Like, no, like you had a thesis, I had a thesis, mine proved to be correct, yours proved to be wrong.
Yeah, I think there's two nuances here. I think people are reasonable and they will accept that people will get stocks wrong. I will probably get stocks wrong throughout my life. Everyone will get stocks wrong. We're just public about it because we're content creators, and so it is what it is. I think number one, they respect if you explain why you're wrong and you clarify the thesis, right? If the thesis breaks, people want to know why, right? If they're the reason you even were introduced, if they were introduced to the stock from your initial explanation of it. So that's the first thing. Number two is, and I think this is what people more so are curious about, is there any introspective takeaway you have from this? Because I think the one argument I've heard is that, well, if you really did your DD and it wasn't just like a weekend in Mexico of researching it, you would have found out this could have been something that happened. What is your response to that? Do you think you could have predicted this? And B, do you think next time there needs to be a lot more time before a secret stock is introduced to everybody?
I would say shy away from post-IPO small caps that just recently SPAC'd. I think the track record on most of those companies tends to be really bad, right? So if you look at so you look at some really good names like Grab right now. We're looking at Grab. When Grab came out, there was a real business. It was actually a legitimate business. They're doing what they had to do. They SPAC'd at 10, sunk down all the way to $2.
Yeah.
Okay. It doesn't mean that they're a bad company. It just means that, hey, they came out at a premium valuation and they had an issue. Webull had the same kind of thing happen where they came out with a premium valuation. It went all the way to 70 and then kind of came back down, consolidated, and was starting to break out. And I thought, hey, very similar to a lot of names post-IPO, they could start to recover. And during that recovery, you could make a lot of money while riding that recovery higher. I mean, imagine right now all the people that bought Robinhood when it was $70 and they lost literally up to $7 when it first IPO'd. So the thing is, let the company get some quarters behind it and then evaluate it. So I would say freshly de-SPAC'd companies and freshly IPO'd companies, give them some time to really prove out their business, and then evaluate them afterward. Now, are you going to miss out on a good amount of gains? Because, if you can pick things up at single digits and it ends up going double digits, you're going to make a ton of money. But you're also, taking on more risk when they're at a smaller and, small cap. So, when you look at the names that basically have gone parabolic and then sank down and then gone parabolic again, there's quite a few of them. Palantir had the same thing. It came out at 10, went all the way to 20, came back down to 7, right? And then now it's 144. So the key here is, if you give the business some time to develop, you can actually craft a more accurate thesis. By going into it a little bit too soon, post IPO, post SPAC, you may end up chasing the name. And it happens. I mean, you look at Circle right now. Circle came out, jumped all the way up, and it's still relatively high for where it is right now, right? So the valuation is absolutely up there. Now, if Circle drops 50%, who's to blame on that, right?
Yeah,
that's the thing. So I would say, let businesses get some quarters behind them, maybe even a year, and then reevaluate after a year and see where they are and how they're dealing with the post IPO, post DSPAC hype.
Okay, cool. So last question, and then I got to move on to some other topics. Here's the big question I have for you. Now that Webull's done for you, the thesis is broken.
Mm-hmm.
Are you finally buying Robinhood? Because I feel like that's what started this whole thing. You saw Robinhood running, and you were like, "Shit, I miss Robinhood. What's the next thing?" And it ended up being the case of getting into the second best, which, from a growth perspective, I don't even think they're growing like Robinhood, but their market cap is small. So I get the run that could happen. This Yorkdale thing completely ruins the thesis. Does that mean you finally buy Robinhood?
So,
because you presented the bull case for brokerages. You were pretty damn bullish about that on Thursday. Why not just pay a premium and buy the winner?
So that is definitely a possibility, but I'll probably buy it when it gets a little oversold. Right now, if you look at the RSI levels on Robinhood, they're extremely high, right?
So what is the price?
There's a prospect, and the prospect of a crypto winter is looming also. I mean, I spoke to Matt about it, and he said, look, next year we could have some crypto winter.
Chris, that doesn't make sense. If you believe,
hold on. Hold on.
My
thesis. Let me answer it.
If you believed in a crypto winter, you can't apply that to Robinhood. Why would you buy Webull if you believe in a crypto winter?
Hold on a second. Hold on before you go into it. My thesis on Robinhood is that eventually it will come down because there's going to be a crypto winter. Webull does not have any crypto on it right now. So there's no
whole bull case was they're going to add crypto.
Right. In the short term, which could cause a catalyst for the stock to run.
But if there was a crypto winter, there would be no catalyst. No one would be buying Bitcoin.
But that's next year. That's next year. I'm saying right now, Robinhood is high in RSI. Okay. It is doing really well. And it's a company that I do want to buy, but I don't want to pay the current price that it's trading at right now. I'll wait a little bit before it comes down. And, like I said, the RSI is high. The market's riding an extreme greed. Why would you want to buy it right this second?
I am starting to realize I agree. You don't have to buy at 93. I'm just saying, paying a premium for good quality companies is something we should normalize.
Yeah, absolutely.
Because at the end of the day, we know their growth is not impressive. We know that. They're barely growing in options and equities. And then they did this stupid, you just can't trust management after this dumbass Yorkdale thing they did. I don't think Vlad would ever do. Now, I know the buy button and all that stuff, right? But they moved on from that. I don't think that's going to happen. And the growth is impressive. You're right. There could be a crypto winter. But if that's the case, then there's a whole, crypto's not going to go down and the S&P is going to be at 8,000. That's not happening. So if that happens, everything collapses, which then, it's the time to buy the names that are cheap. But then you're just assuming there's going to be a recession, which who knows?
No, I'm not hoping for a recession. What I'm hoping for is a bit of a price correction where things get oversold. Typically, when you buy companies that are below 30 in RSI, you tend to do well because you're picking things up. I mean, April was the perfect time during Liberation Day, those tariff things. The market right now has a lot of volatility behind it. So I think I can get a better price on it. I'd rather right now sit in some cash. This Webull thing, once I cash out of it, I'm gonna sit in cash while the market is in extreme greed mode. Regardless of how I feel, oh my God, the market's great right now. But I mean, look at Robinhood right now in the last year. It's had a massive run up.
I agree.
It is a really good company,
It
but
could
right
correct
now
very easily. I don't.
you're
disagree.
buying things at a level where the markets are giving huge premiums to stocks right now. So sometimes it's an ideal to wait, and sometimes look, I could miss the run and Robinhood could get to 800. In which case, congratulations to everyone who's holding Robinhood. But at the end of the day, for me, it's like I need to find a good price to enter this thing, and I need to find it with a strategy that is going to give me exceptional returns, right? So for me right now, when it came to Webull, is that literally had this news not come out, we could have actually seen this probably in the 15th. I mean, it hits 15 all $15 on Thursday, right? It went all the way.
I think that's where the point of DD comes in. That's why leadership is so important. Because if there was some more DD from everyone, not just you, but from everyone in the community that got like Troy, Tevis, everyone got excited about, everyone overlooked. Management is a piece of shit for this. Like objectively, they're pieces of
but
shit.
here's the thing. You could where could you go and search to find out if management was going to make a deal like this? Like, what would you going to do? You're going to talk to their grandma and find out like, hey, are you doing a deal with some shady hedge fund?
That comes down to quality of investing, right? Like, can you do the DD to figure out that like they could potentially get into some sticky situation? It's just, I don't know. You're right. It's like that's why I'm saying no one could have expected this random deal to happen, but the fact that it did happen.
The challenge itself with the deal is that most of the time that this Yorkville Advisors has done deals has been when companies were weak and they were not making money. These guys are operating income positive. So it's like, what are you guys doing? Like, why would you partner with them? It's not like you don't need the money. Of course you need the money to grow because, your ambitions are high. But the thing is, why do a deal with them? Why not do a deal with other companies that have a better reputation?
Yeah.
And that's the part that gets me. So, look, if this company was burning cash, right? And they were like burning 300 million a year, me, I typically don't mess around with companies that are burning cash, but this company is not burning cash. They're actually generating free cash flow. They're generating operating income. That's the biggest differentiator. Why they would partner with them is beyond me. So, and the other companies that they did partner with were companies that were in the EV space, like what are they called? Like Lordstown,
VinFast, all these.
Yeah, VinFast, all that. So this is technically a different business, but once again, I have to ask, like, why would you do a deal with them? And that's the part that I guess is the thesis breaker in the short to medium term. Now, let's say they like next week they come out and say, look, we made a bad decision. We ended this deal. We don't want to do it. This thing could go right up again, And at the same time, if the operating income starts to keep growing and they keep operating their thing, there's still value in the business. Like I said, it's something that we'll have to give a few more quarters before we completely write this off. Because once again, the only time a company goes bankrupt is if they're burning cash and they're losing money. This company is not losing money. They're actually generating income. They're generating operating income. So I think these short-term moves, they'll happen, and like I said, for me, I'm just not as bullish on it going to the 30s again. And, like I said, I'll run some option strategies that, get me out of this position with some profit. Because I did have a really good entry, right? But right now it's like what, 1280, 1290?
Yeah. Basically.
Yeah. So even when I do this this compression strategy, it's something that, will see me not lose a lot of money, but I'm not going to I'm not going to gain. How do I say it? I'm still going to be profitable, but it's not going to be like enormous profit that I have on it right now.
Yeah.
And by the way, I have to give a lot of credit to Roy, Tevis, and even myself, because we're open and transparent about this. All right. We didn't say, you know what, let all these other people, sit on this and then we'll dump on them and then we'll talk about it afterward. Like, no, we said it before we took our positions out,
Yeah.
And it's not something that, and that's the other thing. The other thing that I have to give, I am not a person at my age that has enough ego to say, no, I'm going to ride out this company, even though I feel uncomfortable about it, because I don't want the reputation loss of being a flip-flopper. And we've spoken about this in the past where it's like, do you really want to be like the Meet Kevin where you flip-flop on a company? I could care less about being, I'm at the end of the day, I'm an investor and this is my capital. There's tons of companies that I'm going to buy and I'm going to flip-flop on, because guess what? The thesis broke, and it's not worth it for me to lose sleep over it. And I've seen examples of this happen in the past. You saw it with Jeremy, with what is it called, Tattooed Chef, right? He rode that thing all the way down, and all of his followers were watching, like, what's going on, Jeremy? And he was like, no, the thesis is intact. And the thing is, at one point, he had to dump it after everything was completely zeroed out, you know? And it was the same thing with Planet 13. Sometimes you get things wrong. Now, does that mean you negate the other 20 companies he got right? Of course not. That's not how investing works, you know? So I think one of the things that as social media, as content creators, we are going to take risks on investing. Otherwise, what's the point of all of this? You were bullish on Palantir even after the market said, no, I'm discounting this thing to what, 70, 80%? And you let your thesis ride.
Yeah. No, I agree. I agree. I mean, ultimately, if there was a thesis breaker, you get out of something. I think the most important thing right here to learn is that like, when presenting a name, there needs to be a lot of DD done from all angles at the end of the day, including potential situations like this that could pop up, and probably just communicating that this stuff could happen. B, sometimes, like myself, chasing, you don't chase, because sometimes even if, you know, I love you, like, chasing is just not the right way, and other people will follow and they'll get screwed on it. And so chasing is not the right thing to do. And then 3, sometimes you just get shit wrong. Like, it is what it is. It happens. And everyone will have that in their careers. And
and the one thing is, I don't know how much DD someone could do to figure out that this kind of deal was coming in the pike. Like, it's just really hard to figure that this was going to happen, you know? Unless you had some kind of inside information that, hey, this was coming out, that's a different story. But this is not that's what investing is. And look, this company could still theoretically do well. All right. Because unlike the other companies that were out there that were more cash burning, low margin businesses, this is not a cash burning, low margin business. And that's the key, right? I would rather you guys hate me and like, oh my God, look, it's the Chris curse. Okay, if the Chris curse is real, then shit, Carnival should be at $5 right now, and ASTS should be bankrupt. You know, Venture Global next decade. I mean, one of the great things about investing is meeting the people and actually talking to them and saying, Chris, you know, you were so right on certain things. And, you know, and a lot of people, they don't hold it against me when I get something wrong either, because they know that
we got to move on. But most mature people are not going to blame you. There's obviously going to be people that are going to be trolling you. But at the end of the day, like, it is what it is. You're going to get some shit wrong. You're going to get some shit right. I think people just appreciate transparency. And, you know, I'm happy you're coming on. And Tevis did a great video. Tevis, a lot of people appreciated that Tevis, after saying he's going to buy 100,000 of Webull, made a video the next day after this stupid Yorkville thing and said, guys, I'm sorry, but now I've changed my mind. And people respect at least having the ability to flip, which is important.
Yeah. I mean, I think that's the mark of a real and a good investor, in that when new information comes out, you have to change. And especially if it's news like this. This, to me, and the way that I phrased this on Twitter was, this is almost like if they invited Trevor Milton on the board of directors.
Yeah.
You know?
It's weird. And they just went public, so it's weird. Like, you know, there's not a lot of fiscal responsibility here, which is, I think, the reason it's a thesis breaker. All right, Chris, good stuff. Thank you for coming on. Thank you for clarifying. And
it's not fiscal responsibility, by the way. It's public relations responsibility, because
I say fiscal because they want to raise $1 billion, but they just went public. They have $1 billion in cash. That to me is
no. Hold on. So if you look at the terms of the deal, it's not like you can go out there and they're like issuing shares tomorrow morning, $1 billion worth of shares. The way that they structured the deal was that they would essentially I get how they structured it. The problem is, why do you need another $1 billion? Why you just went public? I mean, growth capex, man. That's
how it's growth capex. Why are you getting it from Yorkville? And like, that's where I'm like,
that part right there, I agree with you.
And that's the fiscal part. Why didn't you go to JP Morgan? Why didn't you go to a respected, if you're not going to these types of people, you're going to these shitty actors. That to me is fiscally irresponsible for sure.
Well, I would say there's a couple of things. Number one, they're small cap, right? When you're small cap, the amount of people that are willing to lend you that kind of money is small. All right. It's not like you can go to JP Morgan when your market cap is, 6-7 billion and be like, okay, let's, this is a good deal is going to work out. The other thing is, in my opinion, they could have issued debt, but once again, debt also carries a lot of interest charges. which could have actually put them in a death spiral, like a death spiral, right?
Yeah.
Because the interest rates that they would have had to pay on the money would have been extremely high. This gives them ample liquidity in a way that they can draw upon it if they need, but if they don't need it, they don't have to draw upon it. So it's like, hey, listen, I need 100 million this quarter, to basically launch crypto trading and all this other stuff. They can go to Yorkville and say, hey, listen, I need $100 million. I'm talking, honey. I just brought you a juice. Thanks, dear. Yeah, so they can go to Yorkville Capital and say, hey, I need $100 million. What typically the way that Yorkville operates is the thing that everyone found to be shady, and this is why a lot of the other companies didn't do well. What Yorkville would do is basically short the stock. They would borrow the shares, sell them, give the cash to Webull, and then Webull would then give them the shares outstanding, that basically they would have minus a 2.5% fee. That's the key. Yeah.
Agreed.
So I think, like I said,
we gotta move on. We gotta move on.
Yeah, the deal itself is something that we'll see what happens. Hopefully all the people that did buy, like I said, evaluate your own thesis, see if it's a deal breaker for you. If it is, reduce your position, get out of it. If it's not a deal breaker, by all means, be in it. I've seen a lot of bulls on Twitter and all this other stuff. They said that they're going to buy the dip, and you're seeing it stabilize at $13 right now. So it's not like, oh my God, this is completely dead. All right.
Yeah.
All right, brother.
All right, Chris. Thank you for giving us the transparency of moving on from this, and we'll talk to you later this week. All right, cool. So that's what we got on Webull. Again, I think we spent enough time on it, but overall thoughts is just don't chase. It never freaking works. I mean, it works sometimes and you feel on top of the world, but then it doesn't. And then you feel like shit. Now, if this thing reverses tomorrow, it's like $15. Everyone's going to be happy. But like at the end of the day, I think the deal they did get into is a little shady. And, if you lose the thesis, you lose the thesis and you just reallocate that capital somewhere else. But I will tell you guys what I'm doing tomorrow. Likely we'll be selling those $10 in the money calls. Hopefully we'll be able to pick up 250 to 3 of premium, wait it out basically 3-4 weeks, and then hopefully break even by the end of the month in July. All right, cool. Let's talk about tariffs and what's going on. So part of the reason I think it's weird that the market's down 1/3% is because we did get some good stuff from Basent on tariffs and kind of what's happening with trade deals. So here's him on CNN this morning. Here's what he had to say. Let's listen to it, analyze it, and then we'll keep going from there.
What happens on Wednesday?
Wednesday is July 9th, which is the deadline, the original deadline that Trump set.
We'll see. I'm not going to give away the playbook.
Wait, let me make sure you guys can hear the audio just in case it doesn't. Okay, cool.
On Wednesday.
We'll see. I'm not going to give away the playbook because we're going to be very busy over the next 72 hours. President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly. And, Dana, we're going to send out probably 100 letters to small countries where we don't have very much trade. And most of those are already at the baseline 10%.
But you said August 1st. Do you mean what's going to happen in August?
So countries will get a letter saying that if we have not reached an agreement, then you will go back to the April 2nd level.
Starting when?
AKA, we just delayed the tariffs. We were talking about this all of last week, that there's no way in hell Trump's actually going to make July 9th the deadline. This is what Basent just said, that the April reciprocal tariffs, that these 100 countries who, by the way, he said this morning, have not reached out to them, which means a lot of these countries are like, all right, you're going to tariff us 50%, go ahead, do it. A lot of these countries are basically calling their bluff. Now he's delaying it to August 1st, which is bullish. I actually thought futures would be up on that news, but it might be bearish because it means those countries don't actually want to make a deal. And then on August 1st, what are they going to do? Delay it to September 1st? At that point, it's just going to become a joke. And so now we have another month of waiting to see when these tariffs go into place.
On August 1st?
On August 1st.
Okay, so there's basically a new deadline.
It's not a new deadline. We are saying this is when it's happening. If you want to speed things up, have at it. If you want to go back to the old rate, that's your choice.
When you say that there's going to be a lot happening over the next few days and you don't want to give me the playbook, is there a playbook?
Sure. The playbook is to apply maximum pressure. We saw that the EU was very slow in coming to the table. 3 weeks ago on a Friday morning, President Trump threatened 50% tariffs. And within a few hours, 5 of the European national leaders had called him. And Ursula von der Leyen, the head of the EU, was on the phone. And the EU is making very good progress. They were off to a slow start.
The president said some countries could end up with tariffs as high as 70%. Which countries is he talking about?
I think you'd go back and look at the April 2nd levels. But again, none of those are major trading partners. There are 18 important trading relationships that account for 95% of our deficit. And those are the ones we're concentrating on.
So this is what's going on now. I actually thought the markets would be happy about this. I really thought the markets would be like, oh, cool. The trade deadline has been extended. They probably priced in that they already knew the trade deadline was going to be extended. So that's why they're not moving. S&P down about 1/3%. Tesla still down 295, still down 6%. It's not as bad as I think some people thought it was going to be, but it is down about $20 right here. I think to some extent, the markets are like, okay, so we knew there was going to be another taco. The taco is here. It's not Tuesday, but nonetheless, we got a taco Sunday. We got a delay to August 1st. Trump didn't say it, but Bessent communicated it. And as you can see, very nonchalantly, kind of just like, yeah, well, they'll get the tariffs eventually on August 1st. And so the host is like, wait a second. So you're extending the deadline. And he's like, yeah, basically. So the question becomes, what are we going to get before that deadline? And that is what I think everyone is confused about. Like, what deals are we actually going to see? Trump has said India, South Korea, Japan. I don't know if we're anywhere near those deals happening soon, but if we do get them, Bessent later in the interview also did say that we have lots of deals lined up and they're probably coming over the coming days, not even weeks. He said days. And the big, beautiful bill passed already, which, by the way, I'm reading up on the big, beautiful bill. Like, I'm legit, like, actually highlighting and like I'm reading the actual text of the bill so I can summarize it better. But I mean, it's a big bill. You can call it beautiful, you can call it ugly, but the one thing you can't say is that they are not spending money. From the little bits of the PDF, and by the way, you can just type in Big Beautiful Bill PDF and you can get the whole thing on Google. They're spending a lot of money. They're spending a lot of money. And so I can understand why Elon's upset. I get it. But what Bessent did say is that after we pass the Big Beautiful Bill, we will get trade deals because we'll have more clarity from a regulatory perspective on how we can navigate tariffs after that bill is passed. That bill got passed. It's happening. It's done. The bill is in law. The Invest America Act, which every kid born after December 31st gets $1,000 in their Invest account. Maybe those on Robinhood. That's bullish. Like, there's a lot of good things that happen in the deal. Those are awesome. But we're spending money, bro. We're spending freaking money. And I think Bessent's argument here is just that we will get enough trade deals with tariffs to offset the amount of money that we spend. If we don't get those trade deals, I don't know how the hell we're going to pay for this, because not even the trade deals. If we don't get the tariff revenue from those trade deals and then GDP growth, it's just an unlimited credit card that eventually is going to bankrupt the country. But if we are able to hedge against that, then it's a beautiful bill, maybe. But we're spending a lot of money. And I think Bessent is trying to save face right here by saying we have deals coming along the next coming months, because if we don't get those deals and we don't collect tariff revenue, the bill is just the bill that spends a lot of money. Here's what Bessent said about Elon as well.
Look, the principles of Doge were very popular. I think if you looked at the polling, Elon was not. So I believe that the boards of directors at his various companies wanted him to come back and run those companies, which he is better at than anyone. So I imagine that those board of directors did not like this announcement yesterday and will be encouraging him to focus on his business activities, not his political activities.
And that's pretty much what he's been saying. He's been saying Elon should focus on the rockets and I'll focus on the finance. The question becomes, are you going to be able to get the deals to meaningfully show the markets that you guys are serious about it from a fiscal perspective? So again, the U.S. will impose 10% tariffs on about 100 countries. This is what Bessent said on Saturday, including those negotiating in good faith. This is basically what the market wanted. Remember on April 2nd when the markets were actually pumping when Trump started speaking because he announced 10% universal tariffs, and that's what the market expected would what happened. And then we tanked after he introduced all the reciprocal rates. This is something that the markets can handle, these 10% tariffs. However, he said higher tariff rates for countries not at 10% will be detailed in letters. And those letters are going to be sent out presumably between now and August 1st. And, we're going to see if those letters actually manifest themselves in like some horrible deals that theoretically are not good for collecting tariff revenue, or for some really good deals. Trump did announce on Thursday as well, or on Wednesday, Vietnam. We got to deal with them. We don't know all the details yet, but we do have some understanding that there is going to be a good deal with Vietnam centered around SUVs. So we're going to see how that deal turns out. But realistically, Vietnam, Thailand, the Philippines, these are not the countries we care about like right now. We care about India, China, which we still don't have all the details on what the hell's happening in China. There hasn't been anything official yet. Japan and South Korea and Australia and the EU. So those 6 are the biggest ones. And we just don't have details yet. But, hopefully we will be getting them soon. Palantir right here, 134. Tesla, 295, basically flat. Robinhood, 93.40. AMD at 136. Whereas Webull is that stuck at 12.99, 12.95. Google, 178. SoFi making a little bit of a run right here, 1861. I think SoFi is next. I think she wants 20. We've been saying it for the past couple months now. It's up like 40% in the past couple of weeks. Looks like it's ready to make its run, hopefully with rate cuts coming down the way. Not going to happen in July, but maybe by August. Maybe that one's going to sort of be the catalyst that SoFi needs. And then NVIDIA right here, 158.51, down about 1/3% in the overnight markets. What's up with India? Been waiting on that trade deal for a month. Either they don't have anything, bro, or they do. And, we're all waiting for the details. But I don't know. I think they have something with India. Mexico as well. Yeah, that's the 7th one. Mexico. We need to deal with Mexico, India, South Korea, Australia, Japan, the EU. And then there's one more that I'm forgetting about. Mexico, Australia, Japan, India, South Korea, EU. And Canada, right? I feel like I have 8. And Canada. We still don't have a deal with Canada. And China. That's the other one. And then China. Once we get that in like some legitimized formal text, I think the markets will be really happy. Now, granted, markets are not upset. Markets are, dude, S&P's at all-time highs. Like down 1/3% right here is nothing. We could go back down to 6,000. I still think it's a hell of a year for the markets in terms of how they're reacting. It's probably just consolidating to make its next leg up. But if we don't get those details soon, I don't know. I don't know how excited markets are going to be to maintain this momentum. Speaking of markets and momentum, Bank of America says if we get to 6,300, sell. If we get to 6,300, sell. Now, I think take this with a grain of salt, because if Bank of America also said we are not getting a single rate cut in 2025, I think they're going to be wrong about that. If we don't get a single rate cut in 2025, I think I don't know what Trump's going to do. He might personally go to the Federal Reserve and take Jay Powell and put him out of his misery as being the Fed chair. But I think we'll get one, or at least one cut, if not 2. But Bank of America is saying, hey, we're getting overheated at 6,300 sell. My question is, all right, if you sell at 6,300, when do you buy back in? And if you have to buy back in at 6,000, I'm like, yeah, I guess there's, 7 to 8% of some gains you can make, but still, it's a little hard to time it. And speaking of timing, buying the dip has simply worked. Here's a new study from this is Bank of America Global Research as well. The buy the dip strategy has been remarkably effective this year. The cumulative return for buying the NASDAQ 100 after a down day has been 32% year to date, the highest in 5 years. At this pace, 2025 is on track to record the best year for the strategy since at least 1985. This has even outperformed the return seeing the dot-com bubble. By comparison, the return at this point last year was just 5% if you bought the dip after the NASDAQ had gone down. This comes as the NASDAQ 100 has been down 51 out of 124 trading days so far this year. Almost 40% of the trading days, the NASDAQ 100 has been down. A lot of that has been good in the past couple months as it's recovered from the Liberation Day stuff. But if you bought during the Liberation Day, you made a lot of money. Volatility simply has been one of the benefits for anyone, whether you're retail or institutional. Majority has been retail that has taken advantage of buying the dip. So I guess here's the question. Here is the question. By the way, a majority of you voted 285 on Tesla. We're not at 285 yet. On the open, we're at 295, but that's where most of you thought it would go. Is the next move on the S&P 500 down 5% or up? What do we think? What are we thinking for down or up? For down or up? You still got some people saying 7,000 this year. That is correct. I think lack of trade deals and potentially reciprocal tariffs being introduced that could hinder that. Granted, I think Trump's bluffing. I really don't think we're going to tariff Zimbabwe and South Africa by 50% on August 1st, just like we're definitely not doing on July 9th, as per what Mr. Bessent said today. And hopefully we got some deals down the pipeline that are gonna come through now that this big, beautiful bill has been passed. I mean, this has been the biggest thing that Trump has been waiting for. He got it done. It's a hell of a bill that has a lot of money that's being spent, but nonetheless, now it's just a question of if we have the trade deals to capture some more of that revenue. Here was Trump talking about the letters that they're sending out soon, starting on Monday as well.
Sending letters out on Monday having to do with the trade deals. It could be 12, maybe 15. Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
So now we got to see. I mean, hey, he said we've made some deals. We're sending out some letters. If he made some deals, it's time to see what those deals are. I think the market would be very excited if we actually do have some deals, but we're going to have to see if it plays out. We are going to have to see if it indeed plays out. Steve is not going to be able to come live today, guys. Steve is a bit busy on his weekend. He will be back. Oh, I have to tell you guys something. He'll be back probably either tomorrow or on like Wednesday's show. But he's been pretty busy all weekend. You guys are gonna be happy about this. You guys are gonna be very happy about this. It involves Steve. It has to involve Steve, right? He was really happy about this, but I did it. I finally did it. I watched Old School last night. I watched it. I legit watched it. I was texting him the whole time. I watched it. I'm not going to watch it again. I mean, it's a good movie. It wasn't like, oh my goodness, it's the best movie in the world. It was decent. I thought it was okay. I don't think you can make a movie like that in 2025. I don't think you can do that. I think, dude, they started throwing out some pretty aggressive terminology within the first 5 minutes of the movie starting. So I don't know if you could make that movie again this year. But yes, my boy Blue, I get it now. I get all the references. I legit watched it, bro. Like I'm not even just saying like I went on ChatGPT and looked at the summary. Like I actually watched it. It was on Netflix. So it was available for me to easily watch. And look, it was a good movie. It's a very interesting concept. Obviously, it was hilarious. I just don't know if I would watch it again. Like, it's not one of those movies where I would be bored and be like, I want to watch Old School again. But it was not bad. It was not bad. So I'm proud of myself. I actually did watch a movie. Did you tweet while you watched it? No, I did not tweet. I did have my phone with me. I checked my phone a couple times, but it's not like I legit just didn't pay attention to it. The streaking thing from Will Ferrell was hilarious. Will Ferrell's just been absolutely, he's been a, incredible actor for his career. And I feel like, I've seen this movie. Like some of these scenes were familiar, like the party scene, the streaking scene. I was like, I feel like I've seen this before, maybe like a decade ago at a friend's house or something. Because it was bringing back like, oh, I feel like I've heard of this movie, but I still didn't really know what the plot was about until I got, the Grey's Anatomy chick dude, she is so beautiful. What's her name? The Grey's Anatomy chick. I should know Grey's Anatomy star. She's what's her name? Ellen Pompeo. Oh my God, she was beautiful. I love that woman. She was beautiful. So she was in the movie. It was a good movie, but I'm just not watching it again. I probably wouldn't be watching it again. So there you go. Next one's got to be Casino Royale. I want to watch that one, or maybe Lost in Translation. Maybe I should. Maybe we should do Lost in Translation, so we can say to Tom Lee that we weren't lying. But yeah, I was proud of myself that I did watch that movie. Here's another stat that came out over the weekend. Individual retail investors spent a record $155 billion buying stocks and ETFs so far in 2025. $155 billion. Retail appetite is very strong. In the Tom Lee interview, I asked him about retail investors, and he had a lot of good things to say about retail simply because he said retail has been smarter than everybody else. And there's a reason, retail has been as smart as they've been. But nonetheless, retail has been plowing money into the stock market. And here's another thing, and we'll talk more about some of the parts of the Tom Lee interview that I want to show you guys that I thought were good. But he did talk a lot about Ethereum, and I'm not going to lie, he has a hell of an argument. If you believe that 50% of the gas fees from stablecoins being a multi-trillion-dollar market are going to go to Ethereum, then Ethereum should do well as an asset class that has just not really benefited in the crypto bull market we've had over the past couple of years. Speculators have built one of the largest short Ethereum futures position in history, which could be another reason why Tom Lee's getting excited about Ethereum, because everyone is so bearish on it from an institutional perspective that if there's any reason to be bullish, which he presented some pretty good research on the pod about why, Ethereum is going to be one of the next asset classes to explode if stablecoins become legitimate. You never know. Maybe those futures get wiped out and people have to end up covering their short. And then here's one more chart I want to show you guys, and then we'll watch a couple clips from the Tom Lee interview. Equities as a share of household assets. This was updated over the weekend. 49% in the United States of America. 49%. Japan is 13, the UK is 10, the EU is 10, and China's 9. For my audience that's in the EU and the UK, you guys are pretty unique for even caring about investing, because the fact that only 10% of household assets actually have equities as a core part of their investing strategy, I mean, it's a very minimal amount, right? I would imagine that even talking about investing is theoretically taboo in those places, whereas in the United States, it's becoming mainstream. It's becoming very mainstream. 49%, 50% of households care about equities, and that's only growing and growing and growing, right? So anyone who is in other parts of the world that simply don't have that exposure or don't have the excitement over equities, you are definitely differentiated from the rest of the population. Can you talk more about Tom Lee saying this is the most hated V-shaped rally? Yes. Okay, so we'll end out the future show today. I think we talked about all the main subjects. We'll get into some of the Tom Lee stuff. We talked about Elon and Trump. Tomorrow will be very important when the actual market opens, and we're going to see how much volatility comes in for Tesla. We talked about the tariffs. I think it's pretty bullish what Basent said today. The question is just, does the market interpret it as bullish, delaying the tariffs till August 1st? And those were the two major things. We looked at some macro charts. We talked about Webull, but there's not that much else that happened over the weekend. The main thing was Elon and Trump, and then the tariffs. And now we get earnings that start on Thursday. So we are getting back into earnings season, and then we'll keep going from there. Okay, so let's talk a little bit about the Tom Lee interview. I do think there were some gems that he dropped and that he discussed that I thought, quite frankly, really made me personally think differently about some things. So I think the first thing we'll do is we'll start off with Tesla, and then we'll talk about some of the more macro stuff. So I told you guys on Thursday that I think I'm going to say some stuff that makes people excited if they own Tesla. And if you don't own Tesla, maybe it's going to make you think a little different about it. Here's what he said. And some people may disagree, but I think what he said about Tesla genuinely, and it can be applied to a lot of other names, was one of the reasons why this stock gets the premium that it gets.
So a lot of the institutional guys will say, well, Tesla's at $1 trillion, PE of 200. That person that can tell you all the ins and outs of FSD doesn't understand valuation. But your argument here is, well, that person probably owns a Tesla. They have experience with FSD. They can be a little bit creative in terms of their imagination on where the company can go. And valuation.
Also, the memes of what I was doing with my hands were hilarious on Twitter. The memes of I think you guys typed in guy moving hands like crazy. Yes, I will acknowledge my hands where I was doing the jazz hands. I don't know what was going on, but I talk with my hands. It is what it is.
Valuation might not matter as much. Is that the argument from the valuation side that says a 200 PE is crazy versus the cult member who says, I am in this car every day. You don't understand what you're talking about.
Well, let me put it this way. It's a very cogent question you're asking. But the real second question to that is, how many people fundamentally need the PE to be the basis for an investment? It's a shrinking universe, okay? Let me put it this way. Do you own a luxury watch?
I don't.
Okay. So let's say someone has or do you have any art or something, like a collectible?
Probably not, no.
Okay. Because remember, Tesla is scarce.
I have
right?
a Tesla, though.
Yeah.
Yeah.
But see,
a lot of you guys laughed at that part too. I don't know what was funny about that. No, I don't own a watch and I don't own any expensive art. But a lot of you, for some reason, everyone laughed at it. I was like, dude, I don't. I could have lied, but I would literally be lying. Dude, I don't own a watch. I don't think I have a single watch. And then I don't really buy luxury art. So I was just like, no, I'm sorry. But I have a Tesla.
See, okay, I mean, Tesla is as scarce as art, because name another company like Tesla. Like, there's electric car companies and robots, but in the world today, like, go around the world, ask 8 billion people, is there another company like Tesla? We'll say, nope, there's only one Tesla.
Just one Tesla.
Okay, so that's a Da Vinci,
Wow.
right? Think about
Okay, that was not a fake wow. Okay, that was a wow where I genuinely, bro, you guys are gonna say I'm glazing? Genuinely, I was like, I've never thought of Tesla, the stock, or the company, which is a byproduct, is the stock, a Da Vinci. And I never thought of it like that. I never thought of it as a fixed supply of one.
that. It's like there's just one Tesla. And so then you say, take, like, pretend this is a Da Vinci, and like someone will say, I'm only going to value this based on the value of the wood and the string and the paper. And so the PE of this is actually 12 cents. But then like 100 people say, no, there's only one painting like this.
Right.
And I'm going to pay $100 million. That's the Tesla thing. Like, some people will say, oh, Tesla's a car company, but that's a small cohort. Everyone else says Tesla's a Da Vinci, right? Like, there's no other company like Tesla in the world. So shouldn't that scarcity be worth a premium?
Dude, you guys are gonna think I was glazing, bro. But when he said it's a Da Vinci, now I know the pushback is like, yeah, well, those cash flows are not very Da Vinci. Yes, those earnings are very. What's a crappy artist? I don't know the name of a crappy artist. That the earnings remind you of more of a crappy artist than a Pablo Picasso. I get it, but if you believe that the Arnie had the Ferrari comparison long before Tom did, yes, I mean, now I'm remembering that Arnie did make this comparison a long time ago as well. If a Ferrari, a Da Vinci, a Picasso costs hundreds of millions of dollars, and at the end, the Mona Lisa, right? How much is the Mona Lisa worth? How much is the Mona Lisa worth? I mean, people say it's worth billions. People say it's 850 million. You know, Google Gemini says 850 million to $1 billion. Why? Because there's only one of them, right? And so if Tesla as a robotics and AI play, and then Elon Musk's brand, which I know might not be the best right now, but nonetheless is a one-of-one brand, a one-of-one company, then it's a Da Vinci. And like you pay a premium for it. And the same thing with, there's only one Alex Karp for Palantir. There's only one Jensen Huang for NVIDIA. There's only one Vlad for Robinhood. That doesn't mean you ignore the company's metrics. But Tom was making a broader argument. His real argument that I think people appreciate is that the retail investor does not give a shit about all of the things that the institutional investor cared about when Tesla was at $10 or when Palantir was at $5. The retail investor cares about the qualitative elements of the business. And then if the growth is there, the quality will be justified by the quantitative growth metrics, which will then ultimately create a one-of-one company that hopefully makes people a lot of money because they believed when other people didn't believe. That's what's happened with Tesla, NVIDIA, Palantir, Robinhood. Like that's what's happened with these companies. They all had the growth eventually to show for the one-of-one qualitative element that people get so excited about. Now, the thing about Tesla that people will push back on is they say, well, Tesla's not growing anymore. And I get it. It's not. But the potential of robotaxis and Optimists and energy is like a Da Vinci, because again, what other company in the world has those verticals that are actually possible to be able to scale into multi-trillion-dollar industries in and of themselves? All 3 or 4 or 5 of those verticals that Tesla has. Now, again, people can say that's bullshit. That's totally fine. I get it. People can say that analysis doesn't make any sense. But I just do think from a creative perspective, this is part of the reason why I asked Chris, hey, are you buying Robinhood over Webull? Because yes, Robinhood's expensive right now. I get it. 20 times price to sales. I get it. But damn it, it's a good company. And it's a company that's not going to stop. And it's a company that's going to keep executing. Like, there's a reason you buy Rocket Lab over whatever shitty space company that starts tomorrow. It's like, it's really hard to do this. Like, we saw what happened to SpaceX's valuation after they figured it out. 350 billion, probably going to $1 trillion. Rocket Lab's barely at, what, 20 billion? Like, there's quality there. And because there's quality, that's why you pay. Rocket Lab's expensive, dude. You're paying like 35 times price of sales, and they're not even profitable. But you're believing in Peter Beck, the founder, who's one of one, and you're believing in ultimately their ability to pull it off. So, yeah, I think that perspective was not the worst argument from Tom, and I think it made a lot of sense. Now, let's look at what he said about institutions and why they didn't buy the dip, which I also thought was really interesting to kind of get a grasp on why they missed the rally.
Investors, they have to sit in guardrails. And like when the VIX goes up, they have to cut risk. And when the market has a drawdown, they have to cut risk. So
Right.
basically, when the market falls and there's volatility, institutions can't hold on to much. So they're forced to sell. And so we would show them, the reason we said there's waterfall declines are V-shaped is that if you look at the last 100 years, as long as you don't generate a recession impulse,
Right.
it's always V-shaped.
Right.
So that was our bet. It's like, this is a growth scare because high yield wasn't.
I get it. There were too many rights. I get it. There were too many. I get it. There were too many rights. I get it. It was a mistake. I could have edited those out, but I guess I don't know. I didn't. I got used to it when I was listening back to it, but then when I actually listened back to it, I was like, this is getting freaking annoying. So I get it. We're gonna fix that in the future, but I don't know why I kept saying right. There's just too many rights coming out of my mouth.
Reacting, so it's just the stock market reacting.
Right.
Now, a second thing that got people super bared up, our institutions, was, Tom, the Fed's not coming to the rescue. They said the only reason markets rally is the Fed cuts rates and unleashes money. And actually, our argument was that's actually an illusion. So our belief was that you'd still get V-shaped even if the Fed didn't cut. But a lot of people were saying, look, the Fed said they're not going to cut,
Right.
so we're going to actually keep falling.
Right.
But instead, we had the V-shaped recovery.
Why were you able to see that it is an illusion to think to depend on the Fed to bail you out?
Well, I think it is an illusion because when the Fed is adding liquidity, it's just giving the money to the banks.
Right.
So if the banks aren't lending, like that was happening like after 2008. They gave the money, the banks just built up reserves.
Right.
Like it wasn't.
Dude, it's annoying, bro. I get it. It was one of those things where I was like, in a conversation, you tend to say that, but it's a recorded podcast. So I understand it's annoying. And I don't think Tom was annoyed by it, right? Like usually the other person wants that positive affirmation that you're listening. And instead of me saying right, I would have just been nodding my head the whole time. I would have just been a bobblehead, but I could have edited that in the post. I could have taken that out. Now, granted, I would say in the comments out of the I think we had 700 comments on the video. I would say 30 of them commented about the right. Like a majority of the comments didn't really care. Probably even less than that. It was probably 15 to 20. But when I listened back, I was like, it's annoying. I get it. So in the future, we will correct that situation. But every time we listen to a clip and you guys hear it, I know you're going to say right in the chat, which you should. But it was annoying. I get it.
Isn't sloshing around.
Correct.
So the more important money is actually retail. And that's guess, there's 4 cohorts, 4 or 5 real distinct cohorts in the market today. So we know there's institutional.
Right.
There's non-US,
Yep.
right? And
Foreign.
everyone's like, oh, we're leaving the US. There is high net worth.
Family offices.
Yeah, exactly. They stay bearish because they follow what hedge funds do.
Right.
Then there's corporates who do buybacks.
Correct.
And then
Now everyone's noticing it because I pointed it out. It's just every time I listen to it, I'm just like, dude, this is too many rights.
there's retail. Retail was the only one buying the market at the April lows.
40 billion in March and April.
Yeah, I'm very proud of the retail investor.
Well, part of the reason they do. Next time I'm gonna say left. Next, next time I'm just gonna say left and see what happens. That was ridiculous, but either way, I will learn from that for the future because I agree it is a little annoying.
Did is because they listened to you. So I guess the question here is, why do you think retail was able to see through? I mean, I know institutions have a fiduciary responsibility to sell, but why didn't they buy as heavy as retail?
I think it's because retail investors see this as a stock market. They're like, I like Palantir. I own Meta. Like, should Meta get killed because of tariffs? You know what I mean? Like, should Palantir get down to 80? Like, if you think about it, like a retail investor sees it as stocks.
Right.
But the higher up you go, they're more macro. They're like, oh, Trump's going to just drive us off a cliff. Fed's going to kill us. And so these actually create biases.
Right.
And then when the actual economy doesn't, or the stock market doesn't react to what their framework is, then they're like, oh, the market's insane. This is the dumbest rally. Only
Correct.
retail's buying. And so then they're caught off sides because they're now sitting on cash, institutions, on a complete full V-shaped recovery. And that's why it's the most hated V-shaped recovery.
Yeah, I mean,
So that was his thesis. It helps keep Tom on his flow. Otherwise, he'd feel like he needs to check if you're on the same page. Yeah, I agree. I like naturally in a conversation when you're affirming someone who's speaking, it helps them keep their flow. However, I could have just edited it out to me saying right every time. Like it wouldn't have taken that long to just like minimize my mic after like the 17th right. But it's a learning lesson. We will we'll keep it up for the future. But nonetheless, look, his point was, hey, the institutional investors, they were so macro driven. They were so Fed, liquidity, Trump, tariffs, yada. They weren't able to see this as a stock market. And as a stock market, does Meta deserve to go down 40% because of tariffs? Probably not. Meta's not some expensive company. Does Google deserve to, I think Google got to like, what, 142? Did Google deserve to get punished that much? Were people going to stop searching because of tariffs? No. So it's like, when he said retail investors saw the market as a stock market versus like all this macro stuff that people, like obsess about, which are important things to care about, but it's just like, they're not the most important things in the world. That's where I think, retail was able to have an advantage over institutionals. And ultimately that's what mattered. Hire a debate coach. Dude, that's true. That's true. I've never done that before in all my podcasts. You guys have seen I've never been like, right. So I don't know why I did it this time. Maybe it's because I was really agreeing with everything he was saying. I was like, right. Yeah, correct. Yeah. But at the end of the day, we didn't need one. K. Roger, thanks for the $10 super chat. You are my Da Vinci of investing. You seem to be so bullish on sunflowers today, right? Correct. What's your thesis? This is hilarious. This right, correct thing, you guys are going to turn into an inside joke. I know you guys will. No, it's July, bro. It was hot as hell today in freaking Jersey. I felt like wearing some flowers. So that's why I put on the shirt. Were you nervous during the interview? No. So some people thought I was saying right and correct because of nerves. Dude, if I was nervous, I would say I was nervous. Like genuinely, there's no ego boost for me to say I'm not nervous. Like I get Tom's a big deal and interviewing him is fun, but I don't get nervous for these things, bro. Like I really don't. With Vlad, I was not nervous at all when I interviewed him in the New York City offices, like at all. Like it was just, I was excited. Also, I had my questions. I had my line of thinking. It's not like I went in there winging it, right? I did my research. I looked up a lot of stuff. I had a flow of where the conversation would go. It ended up being really good because Tom's just a natural. But I wasn't saying right every time because I was nervous. I genuinely was like intimately involved in the conversation. It just ended up being annoying for the audience. But no, I wasn't nervous. The one thing I was nervous about, bro, is like the freaking cameras not like, I was like just constantly trying to make sure the mics were okay. The cameras were like, I didn't have a videographer with me. So I just I set it up myself and I was just hoping I know some people were complaining about the white balance and all that. I was just happy we got the footage, bro. Because if we didn't get the footage, I would cry. Like I genuinely, if the footage got corrupt or something, I would have been so sad. But the footage came out pretty damn good. The audio could have been better, but that will work on in the future. And we got the podcast. We got it done. So, and I got to convince Tom that I watched Lost in Translation, which was, it was the best thing ever, bro. Like I literally was saying, oh, I love that one too, knowing that you guys would get me on that, but it was good. Okay. Last thing. Here's what he said about Palantir and Robinhood.
It's great. But if someone said what's my favorite country? Actually,
wow. Just got $1 billion AUM. Congrats on that.
Almost 1.5 billion actually.
Wow. Well, no, that's you should be correcting me on that. 1.5 billion is not easy to raise. Two companies that my audience particularly care about that are in grain shots. Just any quick thoughts on them? Start with Palantir. Any thoughts on that one?
Yeah. I mean, Palantir to me is reinventing what it means.
I love how he says that Palantir. I just like how he says it. Palantir. It was he said it in a cute way.
For a company to have a relationship with a corporation to make them a better business. Usually that's like a consultant,
right,
or a tech company,
right.
Palantir is both with few people. It's almost like they're getting a wizard. Palantir is like the wizard of the Fortune 500. Well,
dude, how many fund managers actually explain Palantir like that, right? He explains it as a software and as a consultant, which they are with the forward deployed engineers. And then he's able to explain they're like a wizard of the enterprise. And so I think his understanding of Palantir is actually pretty in depth, and it is a granny shot. That's part of the ETF.
Of course, the government, but look at the role they played in a lot of things that are look like magic. That's Palantir.
4,000 employees, less than 800 customers. Pretty incredible. Doing about
Yeah.
$4 billion in revenue. Second one that just became the largest holding of granny shots. Robinhood. Anything
Yeah.
on this one?
Yeah. I mean, Robinhood's amazing.
He then gave an incredible endorsement of Robinhood, and it's in Granny Shots. But what he said about Robinhood as well, I think, is a thesis that all of us have been correctly identifying. And, it looks like it's going to continue to be one of the largest holdings inside of that ETF.
I think it's the Morgan Stanley of this young generation. What people forget is in the 1980s, Wall Street was, this old boys network, and a few brokers were starting up for the baby boomers.
Right.
Baby boomers were in their 20s then.
Yeah.
And Charles Schwab was a newsletter.
Yeah.
And then he's like, well, I'll become a broker. So the brokers of the boomers, which was like E-Trade and Schwab, well, that is Robinhood today.
Yep.
So I think that Robinhood is incredibly smart. They're crypto. They have a UI that is amazing. They understand how important that is. And then they're making really smart moves. So yeah, that's why it is a granny shot.
I love it. Tom Lee, thank you for everything you do. Thank you for being the voice of retail. And thank you for the time.
Great. Thanks.
You crushed it. Dude, he did crush it. He absolutely crushed it. After that, I didn't show the footage, but he apologized because in the middle of the interview, he had to check his phone for a little bit because he was getting like these banks. Dude, this guy is so busy. He was getting these banks that were calling him and they wanted to get the wire because he's doing this deal and this and that. So he was just like, this is Tom Lee. He's the busiest guy in the world. And he's apologizing to me because he had to check his phone during the middle of our podcast because he has to probably wire however amounts of money to close some deals, And it's like, he's like, the fact that he actually apologized that he had to check his phone. It's like, no, of course, like if you got to get deals done, of course you got to check your phone, but he cared so much about making sure that he gave me the time. And that's just like a sign of respect that he actually wanted to do this and take the time out of his day. And it's a level of humility that I think, most people don't see from him, and he has it. And he's very down to earth, very humble. He took time after to take pictures, like just an awesome guy, just an awesome freaking guy. And yeah, man, it was fun. It was really fun. I'm happy you guys enjoyed it. Again, most watched video ever on my channel. Been doing YouTube for 4 or 5 years at this point. It's at 128,000 views in 2 days. I've never had a video do this well in 2 days, but it's doing it. So I think it shows that a lot of people care about Tom, and the interview itself hopefully was good enough for YouTube to recommend it to more people because of the flow of the conversation. And yeah, it's not too bad. Are you taller than Tom Lee? I'm a little bit taller. I'm a little bit taller than Tom Lee. Just a little bit. I think he's like 5'6", and I'm like 5'8" with my sneakers. So he's a little bit shorter than me, but it's relatively same height. I mean, it's not that different. So there you go. Your hair doesn't count. Dude, we are doing something with my hair. When I move out this fall, we are doing something with it. I am going to consult with a hairstylist, and I'm going to be like, all right, what do I do with my hair? I have a lot of hair. It's stuck under a hat. I need to do something with it. And we're going to see, dude. Maybe we do a buzz cut. Maybe we freaking, I don't know, get braids. I don't know. I have not done anything with my hair for like 3-4 years. So we're going to see. We're going to see what we do. Perm. Yeah, I was thinking of a perm, but a lot of people said perm ruins your hair. I don't know. Dude, it's funny though, because I'm getting all these ads on TikTok of like you can like put something in your shoes that makes you taller or something. It's like they know that I'm like 5'7" or whatever, and I wish I was like 5'10". And it's like, I don't know, bro. Buying a sole for your sneakers to like seem like you're taller than you are. I've never done that, but I don't know. Maybe maybe that's. But then when you take off your sneakers, you just end up being short. So it's like, sometimes you got to embrace it. But I'm not short, bro. Short, I think for a guy is like 5'5" and under. Like that's like short. I'm 5'7". And then with some good boots, I'm 5'8". You guys saying 5'3", 5'4"? All right, everyone who comes to the Miami meetup, you're going to see. Everyone who's seen me in a meetup, I'm not short at all. Like if I was short, I would just say I'm short. I'm not. Now, 5'7" is not like, the tallest guy in the world, obviously. But it's not like, because most girls are like the average height of his girl is like 5'3", right? And so, generally I like the guy being taller than the girl. It just looks better. So it's like, you're in the world of not having to deal with literally being at a girl's height, but still, it's relatively okay. And with the right boots, we get to 5'9". Dude, Steve is like the same. I think I'm a little taller than Steve, to be honest. Steve is not tall either. He's not tall. He's like little. He's either my height or an inch below, but he's not taller than me. So he's kind of the same height here. You guys are funny. Are the guys on Grindr tall enough for you? You guys are funny. You guys are funny. But yeah, dude, like at the end of the day, you know, Tom was awesome. He was great. I don't think anyone cares how tall he is. He's made people a lot of freaking money. And dude, it was fun. It was really, really, really fun beating him. Okay, so Miami. So first of all, let me put the form in the chat. I talked with a few people over the weekend, and I've got a couple of options on deck. One of them is a fancy Miami hotel that one of you guys reached out to me. And they are like best friends with the owner, and they already asked the owner if we can have the spot, and the owner said yes, but the owner has to confirm it, which might take a couple of days. So yeah, Miami is, I think by the end of this week, we are definitely going to have a location. Here's the link in the chat if you want to sign up. And I'm going to talk to a couple more people, but it looks like, I don't want to say the name of the location yet, because it's not confirmed, but it's a really fancy hotel, and it would be really nice to do the meetup there. So, and we would get a private spot booked for all of us. It could fit like 150, 200 people. So yeah, I will get, I'm most likely going to have details by the end of this week. And if I don't, then I'm still trying to figure stuff out, but yeah, most likely. So definitely sign up. You will get an email. You'll join a Telegram group. We still have a long way to go. We have about 2 months until August 23rd, but that seems to be it. Now it might be August 24th. Based on the availability of the hotel. I'll probably find out by Wednesday, either that Saturday or Sunday. But that weekend, you want to be there, and that weekend should work. So should be fun. We'll be seeing each other in Miami. And yeah, I think you guys will be able to see how tall I am in Miami. Tom Lee will be the new generation's Warren Buffett. You know, Tom Lee does have his ETF. I don't know if he goes down the route of like a holding company like Berkshire. But the ETF's outperforming. The ETF's doing better than every other ETF out there, granny shots. So, I mean, he's out. And then BMNR is going crazy, right? So he's had 2 assets that have just made a lot of money for people. But I think a lot of it, you know, a lot of people say it's a product of the bull market, obviously, but he was bullish when everyone was bearish. And if you look at FundStrat's research, I mean, even in the reason they started in 2014 was because they predicted that in the next 5 years, people like me that were, you know, teenagers at the time would be interested in investing. And the demographic data showed that the generation after the previous generation that gets wiped out in the stock market gets interested in the stock market. So if my dad was not investing in 2000, but theoretically that was his time to invest when he was, I don't know, 30 years old or whatever. So he would have been losing money in the stock market, which means my generation after 2009 was making money. And that's what gave them the justification to be like, hey, people will be interested in stocks again, and this research will have a market. And, you know, now this research has massively expanded to thousands and thousands of clients that Tom Lee has. So even their prediction of the generational impact of the stock market has always been rooted so much in evidence that I think that's why he gets a lot of credit for being as bullish as he is. Amit will be wearing his heels in Miami. I will not be wearing my heels, although it's going to be hot as hell. So, you know, I will have to definitely. I'm going to probably wear a shirt like this. I need to have more Miami. These are like Miami shirts. So we'll definitely have something good. And it might be outside, it might be inside. I don't know. I gotta figure out with the hotel. I gotta figure out. But we're gonna see. And it should be fun. It should be a good time. And whoever comes through. Yeah, I will not be wearing flip-flops. I will not be wearing flip-flops. But I think it should be good. All right, cool. Amit, I'm getting braids, so you have to as well. You know, maybe that's the route we go down. We're gonna see. I'm definitely getting a Miami Heat hat. or something like that. I do not own any Granny. I don't own any Granny, and I don't own any BMNR. Honestly, Granny is a lot of the stocks that I want because like it's like Nvidia, Palantir, Hood, etc. So it's like there's not that much differentiation. But for people that just don't want to pick their stocks and just want to bet on Granny, then that's another route they can go down as well. Cool. I think that's it. So it'll be fun. Should be a good time. I think it'll be very exciting. Again, Miami, August 23rd, 24th. I will get official details soon. We're going to make it happen. And yeah, I haven't been to Miami in like, I think 5-7 years. It's been a while since I've been there. So should be a good time. And for anyone who's new to the channel, I think we got like 2,000 subs over the weekend because of that Tom Lee interview. Yeah, we do a market open, market close every day. We do Sunday futures. And so hopefully this content is something that is enjoyable. Hopefully we get some more interviews with some of these big people that are in the world of finance. But I think it'll be fun. I did not buy any ETH after Tom Lee, but dude, I'm like, it's the one asset that hasn't run. Bitcoin, Solana, all of it. Like either you believe in his thesis that stablecoins will benefit Ethereum massively, and stablecoins are only worth about 250 billion. Eventually, they're going to be worth 2 trillion. Ethereum's market cap is like 350 billion. I don't know if that goes to 3 trillion, but it's probably going to be worth more than that if they are the de facto blockchain for stablecoins. But we're going to find out. We are going to find out and see how this plays out. The thing is, the one thing about Tom is I don't think he would attach his name to something that's full of shit. And he could be wrong on Ethereum. I mean, like we know small caps, Tom Lee has not been the most right about. So that's one of the calls that has not worked out over the past. That's what I'm saying, right? Like everyone's going to get calls wrong. It is what it is. But given the level of like commitment they're making to BMNR, the money they're raising from the types of crypto VCs that they've got, like this one seems like he's put a lot of thought into what is the next asset class. Like it doesn't feel like a pump and dump is what I'm trying to say. BMNR, could this dump all the way back down to 10? Of course, because it's up freaking 35x. Like, and you can't blame Tom Lee for that. I mean, like if you buy it at 125 after a 35x, like you've got to accept responsibility. Like there's just, it is what it is, right? These things go up, these things go down. But it's kind of like MicroStrategy, right? Like MicroStrategy went up and down, but eventually Bitcoin had its day, and MicroStrategy now is a $100 billion company. If Ethereum has its day, and I think his prediction is 10,000 by the end of this cycle, then Bitmine is going to be higher as an Ethereum treasury. And they haven't even bought a single Ethereum yet, a single coin. So I think him putting his name to the brand means that they're definitely pretty bullish on Ethereum. Yeah, SharpLink is also going to explode if ETH gets momentum. SBET, all that stuff is going to probably get some benefit. All right, there we go. We're done. We are done for the day. And that's it. Oh, yeah, Datadog. So this one, for those confused why this one was pumping, again, they got into the S&P on Thursday. They're up 156. They're up another 1%. Yeah, they were up 15%. Robinhood did not get the S&P 500 inclusion. Now, granted, they had to pick an IT company because they replaced it with an IT company, so it makes sense. But September is the next one for Hoodie. And we're going to see if we get there. NVIDIA right here, 158. Tesla, 296. Down about 6%. Google, 178. S&P, 622. Palantir, 134. And then Hoodie, 93.24. All right. That's it. Is it Patrick's birthday? Patrick says, today was my birthday. Hair doesn't matter as you age. Knowledge does. I love it. Happy birthday to you, Patrick. Thank you for being here. And thank you for spending your night with me or your morning, wherever you're watching across the world. And yeah, happy birthday. All right, guys, I think we're done. I'll be back in the morning. We are starting off a new week. It is the second week of Q2 officially. Had a long weekend. It was fun. Moving on. Honestly, I got bored yesterday. That was Friday without the stock market. Thursday we closed early. Saturday I kind of just chilled all day. And yeah, today I finished some errands, but I am ready to get back into the grind. It's been too long without the markets. We are back. We're going to see what happens with Elon, Tesla, and Trump this entire week. Maybe Elon just doesn't care about this and he got bored of the weekend and he started tweeting about this America Party stuff. Or maybe he goes full throttle and the market then reacts to what happens with it. And then we got to see this tariff stuff. Do we get any real trade deals? The big, beautiful bill is passed. Tomorrow is going to be the first real reaction of how the market thinks about the big, beautiful bill. And then can we get any deals in place to solidify the advancement of basically the trade policies that Trump said would be what the economy needs. Because we got the big, beautiful bill done. He got his spending. Now can we get some deals with the rest of these countries? Does the OpenAI saga have anything to do with Hood's current price action? I don't think so. I mean, maybe some people sold it off because they were worried about the OpenAI stuff. But if you actually like really read into it, it's not an issue. If anything, Hood is one of the only companies that's like really innovating to the tokenized equity. I mean, even Tom Lee was talking about tokenizing equities. Like there's just so many things we touched on in those 40 minutes. And when he talked about Wall Street's trying to tokenize crypto and crypto is trying to tokenize Wall Street, like there's this really good symbiotic relationship between both institutions that are now coming together. And that's where there's a lot of money to be made in the stable coins of the world and the Ethereums and all the other asset classes like a Robinhood that might be first to market when it comes to tokenizing Wall Street. So there we go. All right. That's it for me. Thank everybody. Appreciate it. We'll be back tomorrow morning. Again, deeply, deeply, deeply appreciate the love on the Tom Lee interview. My mom, she reads the comments all the time. And she was reading the comments on the YouTube and Twitter. And, she was, as a mom, she's just really happy that so many people are supporting, it's just a lot of love, a lot of support, a lot of people just saying like, keep going, you're doing good stuff. And they appreciate the content. And so many of you have watched me since 2021, ups and downs all across the journey. And, I kind of think now we're getting to the inflection point where shit's really just beginning. And, my mom was reading the comments and she was just like, you have a really, really supportive audience. And then again, part of the reason I think the audience is so supportive, why you guys care, why this is so authentic is because, gratitude, right? Like, it's just like, I'm just so grateful that people care. Yes. You love the eyebrows as well. I did get them done today. I don't get my eyebrows done though. I get a haircut and the dude says, you want me to clean up your eyebrows? I say yes. And then he does it. I don't know if that means you get your eyebrows done. They look good though. They look pretty good, but regardless, he does my eyebrows. So it is what it is. But no, it's I'm so grateful that people care about the content. I think as a creative, there's a lot of anxiety constantly to perform, to keep building, to make sure the audience is entertained and informed and constantly they're with you and they care about you and they care about growing with their content. And that creates a lot of creator anxiety. And everyone has, if you're in the creator space, you have that anxiety of just like, hey, this is not a 9-to-5 guaranteed 401k healthcare benefits. This is like, you're just out in the world creating and you've got to create enough stuff that people actually give a shit. And I think over the past 5 years, it's resulted in a moment like we had over the weekend with Tom Lee. Definitely a Dominican barber. That is correct. I paid $40 though, bro. It's a pretty expensive, like it's not a cheap $20. It's a $40 haircut. So, I pay him well, I would say. But I think over the past 5 years, it's led to just being so damn grateful that you guys care. And hopefully me providing the content that allows you to keep caring, which is the reciprocation from you guys on the support. And I think that a lot of thousands of strangers on that video with Tom Lee on Twitter that are just responding in the comments. And my mom's like, all of these people, for some reason, they're just genuinely happy for you, Did you prepare questions? Yes. I wrote them down like 10 minutes before, but I thought of the questions a lot while I was on the train and all this, or when I was in the Uber and I was like thinking it through. And then 10 minutes before I just wrote it down and we went through it, but it flowed naturally. And, I think that's what made it a good podcast. And a lot of you guys, it felt that way. And it's like when lots of strangers across the world are showing that type of love, it's something special. And number one, it means you don't want to violate that audience's trust at all and do anything stupid that would get the audience to be like, this is just a scummy person and I don't want to associate myself with them. And so it keeps you very, very uptight on the integrity part, right? And in finance, we know that integrity is, it's just one of those things where you can lose it very quickly if you do some stupid shit, crypto, meme coins, all this dumb shit. So like that's, the number one thing that I never want to get rid of. And the number two, it just keeps you really grateful that people actually care. Keeps you very, very grateful. And, I think that gratitude is the way we're going to build this. That's it. That gratitude is the way to build this. Because a lot of the connections in life that happen come from, I think, just being grateful to even spend time with someone or like get their phone number and have a conversation and be able to like give as much as you can to them and not take. And then eventually something comes back around maybe it's years later, but this whole Tom Lee interview happened from a woman who met me at Palantir's event a year ago. And she saw me interviewing Sham and she thought I did a great job. And and she reached out, like stuff just happens. It just happens. But when it does happen and it's as authentic as a journey as it is, then I think people recognize that. And I don't ever want to do anything to take away from that authenticity and that integrity that's part of the journey. And I think it really is just getting started. I really do think it's just getting started. So yeah, I already texted her. Traditional business school, right? Send a thank you email. No, I texted her, dude, and she's like, she's an angel. She's awesome. And I think, we'll be able to do a lot more of these in the future, but it's dope, man. It was really dope. It was special, but it's done. We had the moment. It was cool. Posted the podcast. It did what it did. And now we move the hell on. You don't get too complacent. You go forward from it. That's one question my mom asked me. She was like, so how does it feel? And honestly, I was just like, it feels great, but it's like, I don't think I had a moment to really sit with it and like take in all the feedback. And it's really humbling, bro, when you're reading these long messages from people, all this stuff. But it's like, at some point you're just like, I appreciate how much people feel connected to the content, but move on, right? It's like an earnings, right? It's like, all right, you have a good quarter, stock goes up 10%, move on. Because the stock could go down 10%. So it's like, you got to deal with the volatility of it, which in this business with creativity, it's all rooted in volatility in terms of the audience and all that stuff. And it's just like numbers go up and down, views go up and down, but like keeping that core set of the audience that cares and growing it over time naturally is what really defines a career. And then B, who's next? We got Tom. Who's next? Right? Like who's next? What is next? That's that what is next? And like, it can always be a flop. You get a one-hit wonder type of thing. You got to keep elevating it. And I think we had Vlad last year. That was the big one. This year, I think we've had two big ones, Brett and Tom. And I think when we get the studio, we should be able to have like 10 to 15 big ones every year. It shouldn't just be one or two. We got to get some infrastructure set up for that. But I think if we do, then, we should be taking it to the next level. So, all right, that's it. I've been saying bye for like 20 minutes. Appreciate you all. Love you all. Thank you again for the support. Absolutely means the world. And we're going to keep this going and keep doing what we got to do. So thank you, everybody. Appreciate it. I will see you guys tomorrow on the Market Open. Bye, everybody. Have a good one.